We'll call to order the Finance Committee meeting of Monday, September 11th, 2023, and ask staff to please call the roll.
Council President Curry.
Here.
Alder Verveer.
Here.
Alder Vitever.
Here.
Alder Madison.
Here.
Alder Evers. Alder Rummel.
Present.
Mayor, you have quorum.
Thank you. It's slightly less effective over Zoom, but given the day, I thought we might start the meeting with a moment of silence to remember and reflect the events of 22 years ago, and how that day changed our world in a number of different ways, but particularly the folks who lost their lives and their family members. So if you'll just join me in a moment of silence, please. Thank you. We have no general public comment. We do have public comment on item 17, so we'll take that up at that point in time. Are there any disclosures or recusals on today's agenda? Seeing none, that will take us to the consent agenda. We will obviously be excluding item 17, which is the capital budget briefings, from the consent agenda. Are there any other items that alders would like to have excluded from the consent agenda? Alder Rummel.
Thank you, Mayor and Chair. I would like to have an overview of items 2 through 7. I don't know that I'm going to pull them all, but just kind of what's going on. And I had kind of some general questions like, what if we don't get the grant? Please help me understand why the Teamsters need to sign on. Just sort of the basic big picture. Thank you.
Okay. Thank you, Alder Verveer.
Thank you, Mayor. Please exclude agenda item 16, as I'm looking forward to the Finance Director's presentation and I have some questions.
Absolutely.
Thank you.
All right, so we will have items 2 through 7. Perhaps, Alder Rummel, we could do those questions in advance of the consent agenda and see if you wanted to pull any of them in particular. And then we'll definitely exclude items 16 and 17. Are there any other exclusions from the consent agenda? All right, not seeing any. Can I get a motion on the consent agenda excluding items 16 and 17?
Move to approve.
Is there a second?
Second.
Moved and seconded to approve. And then staff, I see Director Stuenberg is here. So questions on items 2 through 7. Justin, do you want to just give an overview of what these items are?
Sure. Yeah, good evening, everybody. So this is just some standard process for us in terms of executing our grant awards. So we've just kind of lumped them all together just for simplicity's sake to make sure that we're all coming through at the same time. But these are all grant awards that we have already received authority from council to apply for and have been awarded. Now we are just going through the final execution phase for these grants. And so again, they're not a situation where, we may or may not get them. They are grants that we've already been awarded. We're just going through the final execution phase for them. So,
and just it is slightly unusual that the Teamsters have to be involved because we don't do that for other grants. Can you? I assume that's a contract item.
Yeah, so that is actually a federal requirement, and so typically in this final execution phase, we do include the Teamsters sign off in that action item. It is just a federal requirement that we have to allow unionization of our staff in order to get federal funding, and so therefore they have a sign-off process when we receive these federal grants as well. So, but it's never been a hurdle or a hiccup in the past. It's just a formality. But I can, if it would be helpful, I can just kind of briefly go over what individual grants are for, if that's helpful, or if just the overview is fine.
Alder Rummel, did you have additional questions?
Yeah, I would like the kind of a little more detail. And I guess personally, it wasn't very clear from the way it was written that they were already awarded. So that does answer my question that it doesn't matter because we got the money, but just FYI. But I'm interested in all the variety of things.
Sure. So there's a mix of grants here, some of which are competitive. So they are applications that we put in. We competed with other applicants across the country, and then we were awarded those funds from the FTA, the Federal Transit Administration. Whereas others are what we call formula grants. So we receive a certain number of dollars each year from the FTA, just based on our regional population and service characteristics that they call formula grants, that we are awarded each year, and that we can kind of steer them to individual projects as we see fit. So the references, I think, in the first five, so numbers 2 through 5. Those are largely referencing formula grants. And so they are ones where we are directing those funds that we get automatically into various projects, including some of our facility renovation projects, some into our fleet replacement projects, and then 2 of them, the ones that reference 5310, 5310, are into our paratransit services. So that for the most part, these are capital grants with some exceptions, and 5310 for paratransit is one of those exceptions. So that's 2 through 5. Item 6 is the competitive grant. We were notified that we had been awarded back at the end of June, which is a major award for roof replacements, solar arrays, and bus replacements. We were awarded, I'm blanking now, I think $38 million total, which was a very big number and very exciting for us. And so that is item 6 there is the final execution of that. And then item 7 is for our North-South BRT project. And that is related to it's called Areas of Persistent Poverty, another competitive grant award that we received to do some of the early stage planning and design work around the North-South BRT project. So that is a rough overview there. And, again, there's a lot of detail here. Scott Korth is on as well. He's our grants expert here at Metro. And so between him and I, we can answer any other detailed questions you might have.
Well, I appreciate your staff's work and your work and the mayor's work. I think this is, to me, like, at least maybe because it's all at once, very impressive. And I remember many years we didn't get very much or nothing. So congratulations. Thanks. I don't need to pull them anymore. I don't. Thank you, I guess.
Thank you, Alder. Are there any other questions on these items or on others? Seeing none. Any discussion on the consent agenda? Seeing none, it's been moved and seconded. Is there any objection to recording a unanimous vote on the consent agenda and the recommendations therein? Seeing no objection, we'll record that vote. That brings us to item 16, which is Legistar 79590, authorizing the issuance of general obligation promissory notes. And so, Dave, do you want to walk us through this one?
Yes, I can. Thank you, Mayor. So let me share my screen here. Can you all see that? Yep. Okay. So as the resolution states, this is related to this year's borrowing. We do borrowing every year. I'll give you a sort of overview of that borrowing, discuss kind of the major changes in approach with the borrowing this year that are included in the resolution before you, including a what are called green bonds, a new approach in marketing the city's bonds. And then to just let you know that we're also Baker Tilly, who is our municipal financial advisor, has also added a MBE DB advising firm to the team. All right. So on the GEO borrowing overview, just a quick background. Some may be familiar, others maybe not so much. So GO stands for general obligation debt, and we typically issue that in the form of tax-exempt 10-year promissory notes. We interchangeably use the terms debt or borrowing, and we sell that debt or sell those notes to finance the capital projects and programs that are included in the 2023 adopted capital budget. So that budget includes both new projects and programs, as well as carry forward projects from prior years. So we might see projects that are listed as 2021 fleet equipment or something like that. So if we have unspent or unissued borrowing from those prior years, we take a look at those projects, see what has been or will be spent over the next few quarters, and that's how we put together the overall borrowing amount that you see here. This debt is a general obligation of the city, meaning that the city will pledge its full faith and credit through an irrevocable property tax levy to repay that over the next 10 years. And that property tax levy will first be on the December 2023 tax bills, and it'll be first due in 2024. That's first collected in 2024. So that's when the first principal and interest payments will be made. Other city revenues repay some of this debt. So, for example, tax increments in tax increment districts, as well as the fleet fund, stormwater fees are some notable examples. Of all the borrowing that was authorized in the 2023 budget, so both new borrowing and carry forward borrowing from prior years, about 40% of that total is actually being issued as a part of the 2023 issuance. And that's really due to that cash flow analysis I talked about. We look at every project, where they are in terms of spending relative to budget, relative to prior borrowings that may have occurred. And then also what we call what's known as arbitrage issues under federal tax law. We cannot hold on to proceeds for longer than generally 24 months before they're spent. Otherwise, we incur some interest penalties under federal tax law. This is just quick background on how this borrowing will be basically spent by agency, $116 million total. No surprise that the sort of largest allocation by agency is for major streets projects. That's the largest share of the capital budget. Fleet, again, we're purchasing vehicles of all shapes and sizes, and that is occurring every year. And then stormwater projects, the city's been embarking on a number of watershed studies and flood abatement, flood mitigation projects, and that is showing up in our borrowing. The tax increment district borrowing, a lot of that is related to bus rapid transit, and as well as some development projects, but that's primarily bus rapid transit, as well as the transportation amount that you see there. And then you can see it by project and program. About 249 projects will be funded through this borrowing. If we look at just the top 16, over $2 million, that's 73 million of the total. And you can see some examples there, sort of all the bus rapid transit, both east-west and north-south, a little under 25 million. And then you can see some of the major street reconstruction projects with Atwood Avenue, University Avenue, the Lake Street, State Street parking garage, and you can see down the list there some really major infrastructure projects and economic development projects in the city will be funded through this year's borrowing. This is just a look at what has happened over time. As I mentioned earlier, we're borrowing about 40% of the authorized level. That is typical. As the capital budget has gotten larger, we typically are authorizing borrowing in 1 year, and then as that project proceeds, we'll actually issue that debt over a multi-year period based on the cash flow needs and the development pace of the project. This also gives you a sense of where we think we're going to be at relative to interest rates on this borrowing. I'm sure as you all are aware, just sort of reading news accounts, that interest rates have gone up. The city is not immune to that. We will see, all the things being equal, lower interest rates compared to probably other borrowers because we have the highest rating on our debt due to a number of factors, primarily the strength of our local and regional economy, the strength of our reserves in the city, the pace at which we pay off our debt. We have 10-year debt, and the overall management of the city's finances by the mayor and council. But you can see how we've had historically low interest rates since the Great Recession in 2008, and they dropped to incredibly low levels during the pandemic. And as the economy has heated up rather dramatically over the last couple of years, so have interest rates. But again, below what we've seen perhaps 30 years ago plus. This graph just gives you a sense of the existing debt. That's the dark part of the columns, and how the 2023 debt will or issuance will add debt service. Basically, that's principal and interest payments each year over the next 10 years. All right, so that's a little background and kind of level setting on our borrowing. The resolution before you, calling it a parameters resolution. It's really a new approach, a modernization of how we issue debt. And so rather than, we typically in the past have sold debt the same day as a council meeting. And we have everything kind of lined up, ready to go, and schedule everything. The debt sale usually occurs in the morning, and we're putting together a lot of material for the council meeting that evening. We have a finance committee meeting that's usually very brief to run through the results of the sale, and then the council passes a resolution adopting that. The issues we face with that approach is sometimes that does not, a common council meeting date does not line up well with what's happening in markets. And there's a couple examples here on this slide where the Federal Reserve, they meet periodically in what's called the Open Markets Committee, or the FOMC. And that's when they decide on raising interest rates or lowering interest rates and talk about fiscal policy. And sometimes those dates occur on the same day as a council meeting. And so we have had to adjust council meetings in the past, maybe sell at an earlier council meeting, and that also might run up against, for example, you see here the Labor Day weekend. Again, may not be a great day for getting the lowest possible costs on our debt. So under a parameters resolution, which many municipal issuers use, the resolution before you sets maximum amounts for interest rate, par amount, that's basically the amount that we're borrowing, the cost of issuance, basically what we're going to pay, our municipal advisor and bond counsel and so on. And so if the parameters aren't met, we can't do the sale. But if they are, then we would proceed with the sale, and this resolution would authorize proceeding with the various approvals necessary to go forward with that sale and accept the low bid. This is a modernized approach used by many government entities. And again, as I said there, it would have those specific parameters. So the parameters that are included in the resolution, the maximum amount, that we have two series. One is what is termed a basic bricks and mortar. So paying for facilities, street reconstruction projects, vehicles, and so on, the 74.4 million. And then for the first time, and I'll get into this a little bit later, we're going to have a green notes series. And those are projects that have been identified as environmental in nature and are very attractive to certain investors and could result in both, I think, a positive perspective on the city's investments and infrastructure spending, as well as possibly a good price on that interest. The maximum true interest cost, 4.25%. Cost of issuance, you can see there, all in line with contracts that we have for our municipal advisory services and so on. This parameters authority would stay in place until the end of this calendar year, but we do expect to sell within the next couple of weeks. So we expect to sell on September 25th, at this point seen as an optimal date. All right, so that's the background on the parameters resolution. And then included in all of this is as I said, a second series, green notes, $42 million. It's really an opportunity for the city to talk about its sustainability and resiliency efforts and components of Imagine Madison. And this market has gotten more mature and robust over the last several years. And a lot of interest by certain types of investors who want socially responsible or environmentally responsible or sustainably focused investments in these types of projects. So on this next slide, you can see how that has picked up. The green part of the bars are the green bonds. Socially responsible is blue and sustainable is the lighter blue. And so what's called total labeled issues, so these sort of green bonds have gone up dramatically over the last 10 years. And so the market has become, I think, attractive, and we're at a good time to really showcase things that Madison has done for many years. So we're selecting these projects on a self-designated basis. We worked with Baker Tilly using categories under green bond principles by ICMA, which is one of the commonly used standards. Some issuers, we're not doing that this year. They do select a third party to give an independent opinion. Sometimes that gives a little more assurance to investors. At this point, we're just starting out with this. We're starting with the self-designated approach, and we'll see how that goes. We don't know if we'll get a better pricing, but it may result in more interest from investors, and we'll just monitor what that looks like. And then, so that's green bonds. Finally, just wanted to let you know that we do have a MBE financial advisor subcontracting with Baker Tilly on this issuance for the first time. At the city's request, we asked Baker Tilly to proceed with that. This is similar to MBE, DBE, Bond Council that will also be working on this deal that was selected or worked out through the city attorney's office. Baker Tilly has selected Cabrera Capital Markets. They have been in place for over 20 years, and they have worked with the state of Wisconsin for many years in terms of one of their pool of qualified underwriters. And they're assisting on this bond issue with the green notes and other bidding terms within the promissory notes. All right, and that is a quick overview, and I would be happy to answer any questions.
Thanks, Dave. Are there questions for Dave? Alder Verveer?
Thank you, Mayor. And thanks very much, Dave, for the presentation. It was very interesting. I do have a handful of questions, and frankly, your presentation did answer some of my questions a little, so but just looking for some more detail. The first is this new reform, this new approach seems to make just tremendous sense in so many respects. So in that regard, do we know from our municipal advisors, I still consider them Springstead, of course, but obviously they were absorbed by Baker Tilly, but do our advisors say that the majority of their clients do this approach of a parameters resolution in communities across, I guess, the country would be their clients? Or will we be in the minority, or is this the majority now?
I don't know majority or minority, but it is, I would say probably close to a majority, if not more than that. This is a common approach and really gives a lot of flexibility to responding to the markets, particularly for larger issuers. And we are becoming a larger issuer. We still remain, I would say, a little unique in that we do 100% competitive sale, meaning we take the lowest true interest cost. Many issuers will enter into a negotiated sale, but they're typically larger issuers have much larger borrowing involved, and so they may have certain goals with the sale that a negotiated approach might help. The other thing that really benefits the city and why we do a competitive sale is we are a very attractive investment, meaning we're AAA rated, and we are going to repay this debt, and we do get a lot of interest when we sell our debt, and hopefully the green bond series will even add to that interest in the city's debt.
Yeah, thank you. And that's a good segue. My next question was about the so-called green bonds, or Series B, for this year. From your presentation, it sounds like we shouldn't expect perhaps a tremendous benefit interest rate wise this first year, but are you saying that more over time we might attract more ESG investors? Or again, based on what our municipal advisors suggesting, we actually should be able to realize later this month a nice benefit to issuing the green bonds this year?
I think the biggest benefit immediately could be more interest, meaning we could have a larger number of investment banks participating in it, and those that are participating could get a lot more interest in terms of how they are then going to sell the debt that they buy from us on the secondary market. And so that interest could result in a few basis points. I don't want to oversell that though when we say there won't be huge reductions in interest costs, but it is a way to make Madison more noticeable to a broader array of the financial market. And that could result in more competition, and then that could result in lower interest costs.
Sounds good. Thank you for that. And then just wrapping up here, speaking of Series B, of course, in most years, our Series B is a taxable issuance for affordable housing and other private debt or private development that we help assist with. The IRS, requires those bonds obviously to be taxable. Do we not plan, since that isn't mentioned in this parameters resolution, are we not planning to offer a taxable issuance yet this year?
That's a great question, Alder Rivera. We don't need a taxable issuance this year. There is one project that has would be labeled taxable, and that's the Truman Olson grocery. And but because of its size relative to the overall amount that we're issuing, there are safe harbor rules under federal tax law that we can include a certain amount of taxable borrowing within a tax exempt overall borrowing. So we're able to incorporate this all into the one series.
Very good. I know that you mentioned safe harbor. I think that was part of the perhaps boilerplate resolution language I read, mentioning safe harbor provision. So thank you for that. And then promise last question here. Sorry, I forgot what my last question was. Maybe that was my last question. But yeah, I think I'll just leave it at that. Thanks very much.
Thank you, Alder. Are there other questions? Alder Evers? Alder, we can't hear you for some reason. You look unmuted on this end, but we're not hearing you. Is it perhaps in your sound settings? Make sure you have the right microphone picked. I'll move on and come back to you once you figure it out. Alder Slack?
Thank you, Mayor. Director Schmidtke and I had that email exchange with you, and you were explaining to me the percent of the budget that will be going towards debt service. Do you have a graph on those percentages? I just see the numbers, the dollar amounts.
Thanks for that question, Alder Slack. We are going to be covering that in the overview of the capital budget. So if you want to hang around for that, we will go through that information. But thanks for that question.
Thank you, Alder. Alder Rivera?
Thanks again, Mayor. My final area I wanted to ask Dave about occurred to me as I was yielding, and perhaps you two were planning to speak to this later, Dave. But my final question was if you wanted to elaborate further on the reoffering premium that the parameters resolution lays out. I know that that's discussed in the fiscal note, but perhaps you wanted to give us more of a layperson's explanation of the reoffering premium that you're expecting in the parameters resolution.
Sure, Alder Rivera, thanks for that question. So the city, as part of these debt sales for the last several years, basically since the Great Recession, investors have, when purchasing the city's debt, been sort of packaging their proposal, been putting cash up front. That's called a reoffering premium. And the trade-off for that cash up front is higher coupon rates, meaning the interest rates you're going to pay each year. And that's just the way these are structured. Now, we've set up certain bid requirements that limit the overall amount of premium the city would receive. And we do that because if we get a lot of premium, it just creates one-time issues that are difficult from year to year to manage. We expect to get around 7 to 8 million of premium, which would be in line with what we've seen in other years. And that would represent about 9% or so, we're estimating right now, of the total par amount that we're borrowing. And that's in line with what we've seen before. And then how those dollars are used, they have to be used to pay for debt service under Wisconsin law. And so that's how they'll be used. Now, there are some interactions with the levy limit, and I'll go into those more when we get to the operating budget. But primarily, just to give you some background, there is an ordinance requirement that the amount of reoffering premium we receive, we have to then, the levy limit effect of that has to be spent on capital projects unless the council waives that requirement through a 2/3 vote during the budget process. The council at the budget time has invoked that waiver. And so we have used some of that levy limit authority in effect to help with the operating budget. And I assume we'll continue that in the future. But the amounts of dollars received from this borrowing will be in line with what we've seen in the past.
Thank you, Dave. Thank you, Mayor.
Thank you, Alder. Alder Evers, do you have sound now?
I'm on my phone. Maybe this is better. Can you hear me?
Yes, thank you.
Okay. I don't know what's going on. These computers. Just real quick, Dave, and I'm sorry to bring this up, and hopefully I don't sound silly, but given the state of politics and or the status quo of politics in the state of Wisconsin, need we worry about any potential preemption on the part of the state legislature for us to use these green bonds? I just seem to recall that other states have cracked down on socially responsible investing. And I'm wondering if we should be fearful of that happening at some point in Wisconsin.
Well, I suppose if I could predict what the legislature is going to do, I would another line of work. But I don't know how they're going to react. That has happened in other states. I will say that some of those states, from what I've read, for example, Texas has seen a premium on their interest rates. They are paying higher interest rates for not being willing to take that approach of what's also known as ESG, environmental, social, and governance type of designations on debt. But green bonds are, I think, becoming, as you saw with that chart, pretty much more and more widely accepted. How our state legislature reacts, I don't know, but I do think that it's something that both showcases the investments that need to be made in these areas, and there is clearly interest in the investor community in these types of investments, and it could result in a lower cost of our debt, which I think everybody's interested across the political spectrum. So that's my sort of 2-second response to that. So,
well, thank you. I appreciate that.
Thank you, Alder. Any other questions? If not, can we get a motion on item 16, please?
Move
And-
to accept or adopt.
We're going to
adopt.
have Alder Vitever will move and Alder Verveer will second. Thank you. Is there any further discussion on item 16? Seeing none, is there any objection to recording a unanimous vote in favor of item 16? Seeing no objection, we'll record that vote, and that will take us to item 17. On item 17, we have one person wishing to speak, Tyler Leeper of District 13, representing Brittingham Boats. Tyler?
Yes, thank you, Mayor. I'm not sure if this is the right forum to make this request. However, in looking at the capital budget, it currently has funds for the Brittingham Beach House slated for 2026 for planning and 2027 for operations. And I'm looking to request the consideration of moving them to the original proposal of 25-26. Is this the right forum for that request?
So this is the appropriate forum to tell the Finance Committee what you would like to see in the capital budget. Yes.
Wonderful. Thank you. So I would like the original request of the $200,000 in 2025 for the planning of a new Brittingham Beach House with execution in 2026. The facility that we currently operate out of, the Brittingham Beach House, was considered end of life 11 years ago when we opened. The walls are crumbling, the plumbing and electric is failing regularly, and the original design does little to support our current operations. We've had to stop our Camp Wingra from operating daily at this location, and we've not been able to service many requests for groups due to the poor facilities. Even with these limitations, I'm really pleased that over these last 11 years, we have grown to now help nearly 30,000 people access Lake Monona every season. That's about 4 months of operations, and we partner with youth groups, community centers, and groups from across the city to get people out on the water. We are also a major destination for visitors, as we see nearly 25% of our customers coming from outside of Dane County, making this a major point of focus as people come to the city during the summer months. I'm asking that we move this funding forward for a couple of reasons. Number one, because of the current failing state of the building. Number two, there's a significant momentum, in part with the great efforts around the Nolan Waterfront project. And we are seeing a lot of interest in the neighborhood, as well as our partners, in improvements to our facilities, our programming. And I believe that working with this momentum, it'll make private fundraising easier if needed. I understand there's an incredible demand on limited resources with a lot of deserving efforts. Thank you all for including Brittingham Beach House in the budget, and I appreciate you considering moving these funds forward, and available for any questions.
Thank you. Are there any questions for the registrant? Seeing none, thank you. That is, I'm just refreshing to make sure, our only registrant on this item. So we'll move into the briefings. Christine, do you want to, or I assume we're starting with an overview?
Yes.
Okay, so I'll hand it over to you, Christine.
Great. Thank you, Mayor. Good afternoon, everyone. I'm just pulling up some slides. I'm Christine Coe. I use she, her, hers pronouns, and I'm the budget manager in the finance department. To start off our capital briefing process, I'm going to share a brief overview of what's all included in the executive capital budget. I'm going to start with a quick guide on where you can find all of our budget resources and how to effectively read the agency budgets. We'll talk about the agency briefing structure, the schedule for the next 2 days, and the amendment process for alders. I'll share a few of the high-level summary graphs from the executive summary, and then Dave will talk more about debt service and the relationship between borrowing the capital budget and debt service in the operating budget. So for part one with budget resources, this is a little bit of a busy slide, but all of our budget resources are on cityofmadison.com/finance/budget. If you navigate to the 24 budget page to the capital budget, on the left, you'll see each of the phases, and we add to this as we go through the process. So you can get to the agency requests, the executive budget, and eventually you'll see amendments and the adopted budget. In the executive budget section, you'll see the full budget as well as the executive summary. And the executive summary is about 20 pages. We highly recommend reviewing this as a starting point to understand the main projects within the budget. There's an introduction and summary section that has our budget policies, a few summary tables, the horizon list, and then most of the page is dedicated to each of the individual agency sections. There's a one-page resource that has how to read the agency budget that we'll go through in the next few slides. And then There are subheaders with each of the different groupings of budget of agencies, so administration, planning, public works, etc., with the agencies listed underneath. So each of the components of the budget, whether an agency has 1 program or 20 programs, follows the exact same format. The first page is always going to be an overview of the CIP, or the capital improvement plan. There's a summary table that lists all of the projects within the agency's budget, and then the total funding by year. The next part is a graph that shows a comparison between what's in the 23 adopted budget and what is included in the 2024 executive CIP, and then a narrative section that describes the major changes. And we'll include a comment on every single project, even if the comment is that there are no major changes between years. The next section is 1 to 2 pages. That's a summary of expenditures and revenues. And this is a series of tables. The first table is a breakdown of the expenditures by type. So it'll say how much is going towards bike paths, streets, land acquisitions, or other different types of expenditures. The next table is a list of all the funding sources. So this lists out whether the sources come from borrowing, federal grants, special assessments, tip increment, or something else. And then you'll see a table that has a borrowing summary that takes the total general fund GO borrowing and non-general fund GO borrowing, and does a basic calculation on, this just sums up the borrowing sources. And then there's a table that has debt service that looks at how much we're borrowing and then assumes a 10-year repayment period with 3% interest. And then this page ends with a graph that shows the total sources by borrowing and non-borrowing sources. The next section you'll see in every single budget is the carry forward table. So here we have all of the projects that were authorized in prior years where there's unused appropriation authority or borrowing that's going to be reauthorized in the upcoming year. So this is engineering bike ped. You'll see the project number, the project name. The unused appropriation authority column shows all funding sources, and then the last column is how much GO borrowing is reauthorized, which Dave explained a little bit in his previous presentation. And then the next section makes up the bulk of most agency budgets. This is a list of all the projects with additional details on the project description. So you'll have a brief narrative provided by the agency on what exactly the project will fund, the funding by year by source, and then this can be several pages long depending on how many projects are within the agency's portfolio. And then last but not least, there's a list of all of the 2024 appropriations. So this lists all of the projects that have funding in 2024. This will show what the agency originally requested, and then the amount in the executive budget, whether it's GO borrowing or a different source. One thing to note is that this is just what's in 2024. So if an agency has a project that's starting in 2025 or later in one of the out years, you won't see it listed here. All right, so now that you know what's included in the budget document itself, we'll go through the briefing and amendment process. So after we wrap up with this overview presentation, we will go straight into the agency presentations, starting with public spaces, library and Monona Terrace, followed by the PCED agencies, sorry about that, public health and public safety, and end with administration, finance, and zoo. And then tomorrow, the meeting will start as a continuation of today's meeting. We'll pick up the rest of the administration agencies, which is the mayor's office and IT. We'll move to transportation, public works, and public works with the engineering portfolio to end. All of the agencies have at least one slide, and I sent the packet to all alders, and it's been uploaded to Legistar. Our instructions to agencies was to give a very brief presentation because we have a lot of budgets to go through. So we asked them to present for about 5 minutes and to focus on significant projects or major changes from the adopted SIP. So agencies might not talk about everything that's in their budget, but alders are of course welcome to ask questions if if the presentation doesn't cover something that you're interested in. So after the agents, I'll share the slides. So department heads or staff who are listening to this part, I'll pull the slides up when we get to your agency and just let me know when to advance. And then I'll take the slides down so we can have discussion. In terms of the process for amendments, just a few tips on getting started. I'll go through a detailed timeline in the next slide, but I think the first tip for alders who are interested in amendments is to review what's included in the executive budget. It's a big document. There are a lot of details, but it's always good to know, what agencies have planned and what their timelines are as a starting point. After that, if you have things that you'd like to amend, agency staff are really the experts on what is included in their budgets. So we recommend reaching out to the impacted agency to discuss your ideas and keeping the budget team in the loop so that we are ready to draft amendments as they come up. In terms of timeline, alders can start proposing amendments at any time. Typically, folks wait until after the budget, the finance committee briefings. So you can reach out to us anytime after tomorrow. We ask that you submit your preliminary amendment ideas by next Wednesday, the 20th at noon. You don't need to have a fully fleshed out analysis at this point, but we do need to know if you're going to be submitting something so that we have everything ready and we can work with you on getting the final details down before we publish on Friday, next Friday, the 22nd. And we try to publish around noon or shortly thereafter. Just in terms of logistics, any alder can submit a finance committee amendment, but you do need a finance committee sponsor. So if you're not a member of the committee, you can ask one of your colleagues or the council president to be a courtesy sponsor on your behalf. And then if you are working with your colleagues, please be sure to include the relevant people on emails so that we can verify who's sponsoring what before we publish. And we want to make sure that we have the right folks on every amendment. So this slide I've shared a few times when going over the budget calendar, but it has the dates for capital and operating. So again, we consider amendment week starting from Wednesday to Wednesday and ask you to get your ideas to us by next Wednesday at noon. And so that we have time to finish the drafts and publish by Friday at noon. And then the following finance committee meeting is going to be on a Tuesday, and we're going to be hybrid in council chambers. So some staff may be attending in person, some may be virtual. But the finance committee decided on the hybrid format for the deliberation meetings on September 26th and October 23rd to facilitate discussion on the ideas. And then if you have something that doesn't make it through finance or that you don't get in time for finance, you can always bring it to the city council, to the common council, and we have the deadlines for the common council amendments. If you've done this before, we're using the same amendment template as prior years. At a minimum, we would need to know what agency you're trying to amend the budget for, whether it's amending an existing project or adding something new. Just having a brief description of what you're trying to accomplish with your amendment. And then the budget team and agency staff will work with you on the fiscal analysis, understanding the total amount of the amendment and any other operating impacts. But I think just having a general understanding of what you're trying to do will help us with the estimates for the financial analysis. All right, so getting into what is all included in the executive budget. The 2024 capital budget appropriates $266.5 million in 2024, and over the course of the 6-year CIP between 2024 and 2029, there are $1.5 billion worth of projects. This table shows, or this graph shows, the funding by year by citywide element. So each of these elements is based on the elements of a great city that are outlined in the Imagine Madison Comprehensive Plan. So you see land use and transportation, neighborhoods and housing, economy and opportunity down the line. And the segments of the bars are color coded by which element the project corresponds the most to. So no surprise that almost half of the CIP is going to land use and transportation projects, because the budget primarily funds infrastructure like roads, streets, etc. So land use and transportation accounts for about 44% of the total CIP. And the next largest segment is green and resilient projects, which account for 23%. In the executive summary that I referred to earlier, we do have these one-page summaries by element that show the total element by funding source, or total amount by year, and then a breakdown of funding source, whether it's GO borrowing, intergovernmental revenues, which are things like state and federal grants, or other sources. And we also highlight some of the major projects that are within each of those elements. Just a few notes on how we create this presentation. Agencies select the element when they develop their submission, and the way that we have the form set up, they can only select one element. And we know that lots of projects address many city priorities. So land use and transportation can also be a green and resilient project, but just limitations of presentation, people are forced into one option. And so it's not like a perfect representation of everything that a project is going to do, but it's just one way of looking at the range of projects that are included in the SIP. And the presentation is the same order that you see in the comprehensive plan. And then in terms of the 6-year SIP, the $1.5 billion, this is a breakdown of the total funding sources. The primary funding source is general obligation borrowing, which makes up a little over half of the total amount at $815 million, or 54%. The next largest segment is intergovernmental revenues. This includes significant investment from the federal government through many grant opportunities, whether that's in the Inflation Reduction Act, bipartisan infrastructure law, or other sources. Other is a category that encompasses lots of other little sources, including reserves, impact fees, TIF increment, and other. And then we also have reserves applied and revenue bonds that cover mostly sewer projects. So with that brief overview, I'm going to turn it to Dave to go through the GO debt and debt service section of the presentation.
Thanks, Christine. So as you saw in the previous presentation, I went through, we do issue debt as a city every year to finance the cost of projects authorized in the adopted capital budget. And Christine just went through, what portion of the overall capital budget is funded by city debt. As I mentioned in my previous presentation, it's primarily that borrowing is primarily in the form of general obligation, meaning we pledge our general taxing authority to repay that debt. The other part of the debt that we issue is a revenue obligation. And Christine just highlighted that. That's primarily for the sewer projects, in some cases water projects, and then those user fees are pledged to repay that debt. The repayment generally for general obligation debt is made over a 10-year period. There are some instances where we will issue 20-year debt. And we've done that periodic times over the last few years when there have been major facilities projects. And then the annual repayment of that debt, of the principal and interest on that debt, is called debt service. And that's included in the operating budget. It's paid from the operating budget. So the debt service on a new issuance begins in the year following the debt sale. So the debt sale we're going to do this month for the 2023 capital budget will first impact debt service in the 2024 operating budget. And this slide just shows you, this is a snapshot from the 2023 adopted operating budget. And you can see the second line in the table there is the general fund supported debt service on general obligation debt that's been issued by the city, and the city is repaying over some span of time. Now, that debt service is going to be on debt that has been issued a year ago, 5 years ago, 10 years ago, and then as well as the most recent issuance. So it is a mix of issues in terms of the amount of principal and interest that's paid each year. There are some specific or explicit limitations on the capital budget and debt, and then more implicit or policy limitations. The first sort of explicit is the state constitution, and the general obligation debt of a municipality cannot exceed 5% of the city's equalized property value. And I'll show you where we're at on the next slide. Another sort of measure or policy limitation that we might have internally is that level of general fund supported debt service. And we compare that amount of debt service to the overall amount in the budget. And on that previous slide, you saw the table that showed debt service paid from the general fund. And right now that represents about 17% of the budget. And one way to look at that is if we get to a point, or if there's a general consensus around what a maximum burden from property taxes is, more debt, all of the things being equal, and that the debt service to repay that debt could constrain the ability to fund day-to-day operations. Now, the state levy limit plays a role in that. So what that burden is. And so that's one measure or one sort of lens to look through. Another lens is debt per capita, and another possible measure of burden. And then another would be debt as a share of the total personal income in the city. And that information would come from primarily census data. And so it might be slightly different than debt per capita because income can grow faster or slower than the change in population. So if we go to the next slide, when we look at through these lenses, how does our debt look through these different ways of viewing the overall amount that the city has incurred and how it's paying it back? The blue bars on this chart are the constitutional limit. So that is comparing that overall amount of debt that we've issued to that total amount of that's allowable under the state constitution, which is that 5% of the equalized property value. We, as you can see, are at about a third of that allowable amount, so well below the total allowable amount. And as you can see, beginning in 2022, with the rapidly increasing property values overall in the city, that equalized value, that share dropped, relative to prior years pretty significantly. And based on what's in the proposed executive capital improvement plan, that will stay at or below around 30% of the maximum allowable under the Constitution, and could fall closer to or below 27.5% by the end of the period of the SIP. The next lens to look through is that share of the budget, the debt service share of the budget. And that's the red bars that you see here. And so we're at about 17%, a little bit lower now, and we compare that to the general fund budget, excluding the property tax levy for the library. And as you can see under the capital improvement plan, that'll head up towards about 19% over the period. So more than what it's been in the past. And that really reflects significant investments in aging infrastructure, which is, Madison is no different than the rest of the country in terms of massive amounts of infrastructure built in the 1960s and 70s and 80s, reaching the end of its useful life and having to be reconstructed. I think some good examples of that, parts of the massive University Avenue project that is under construction right now had not been rebuilt since 1958. So that gives you a sense of the aging infrastructure. Another good example is the Central Library, built in 1965 and had to be totally reconstructed in 2012, 2013. So those are some examples, as well as the investments that have to be made as the city grows in terms of services and facilities and whatnot. Another lens to look through is that bottom kind of tan yellow bar at the bottom, and that's the share of personal income. And you can see that that's remained relatively stable and is expected to remain stable over the entire period of the capital improvement plan. And again, that's a measure of debt as a share of total personal income in the city. And that information, by the way, is in our annual comprehensive financial report, which you can find on the finance webpage. And then finally, the line is the kind of an index change in debt per capita. And you can see how that has gone up over the last few years, and then what is projected to go up over the next, over the period of the SIP. So it's definitely growing. Its debt per capita has grown quite a bit. It's growing faster than population growth, but it's not growing faster than those kind of couple of other measures, namely the city's property tax base, property value, as well as its personal income base. So those are just some lenses to look through when thinking about the overall size of the capital budget and the debt service, the money that needs to be paid back to repay that principal and interest. Next slide. So I think you're all aware that the state law mandates limits on property tax levies throughout the state. And so that is known sort of colloquially as the levy limit. Under those levy limits, the way that it's calculated, the levy can increase by what's called the change in net new construction. But that calculation excludes general obligation debt service. So in effect, debt service can increase at any rate, and that amount added to the levy, and it is not included in what's controlled under the levy limit under state law. So how does that sort of marry up with what's in the capital budget? So because general obligation debt service is not included in the overall calculation, in effect, it's not controlled, any sort of change in amounts borrowed, whether it's less than we would otherwise borrow due to fewer capital projects, that does not translate into more allowable levy for operations. Debt service is outside of that levy limit calculation. And now a reduction in amounts borrowed does impact property taxes, clearly, because not as much needs to be levied to repay that debt. And you can see that in the table below, where this is a very, very simplified presentation of how the levy limit is calculated. But the first column of numbers there under actual is sort of the controlled amount of the levy, $165 million. And then we do have debt service that's paid from other funds. Those two numbers together are sort of our operating levy, because under the levy limit, even though those are general obligation debt amounts, because they're paid from other sources, they in effect are available. That levy amount is available to use for operations. However, the general fund supported portion of general obligation debt service simply just adds on to the levy total. So you can see of the 273.7 million maximum levy we could set, any change in that debt service does not change the amount of the operating levy. So for example, which is in that middle column, if we, for all the things being equal, we borrowed $50 million less in 1 year compared to the prior year, we'd have about $6.5 million less of debt service to pay. That's not going to change the operating levy that's available, but it will reduce the overall levy. And you can see how that impacts that what's called a calculation of taxes on the average value home. So it does result in fewer property taxes. Now that overall cost and the levy effect needs to be balanced, obviously, with other factors, including the cost of not replacing aging infrastructure, other environmental, social policy goals that the mayor and the council have, as well as investments to foster sustainable economic growth. So taking it all together, just want to give you that background of there are no sort of clear limits on the size of the capital budget, other than what those sort of impacts might be relative to the very clear limits of on the operating levy. And that sort of reducing the size of the capital budget. Sometimes we get questions, well, won't that mean more for operations? It does not under the levy limit construct, but clearly it does have an effect on the overall amount of property taxes needed to pay for infrastructure. But again, that needs to be considered within the overall plan of making sure that we're investing sufficiently in city infrastructure and equipment and other programs and projects. I think that's the last slide, if I remember correctly. Yep. Happy.
Thank you, Dave. We'll take questions on that presentation before we go into the agency briefings. Alder Figueroa-Cole.
Thank you, Mayor. Dave, for that average cost of the average tax calculation, what is the average cost of a home you're using for today's market?
It was the amount that we used for the 2023 budget, which I think was $373,000, if I remember correctly. So these are this is all from the 2023 budget. So it's not been updated to the present. It's just more for, example purposes.
Yep, I get it. Thank you.
Yep.
Thank you, Alder. Alder Slack, questions?
Thank you, Mayor. So Dave, the question I was going to ask before is, you said that sometimes one-time funds are included in the denominator when you're calculating that debt service ratio. Can you talk a little bit more about that, and what are those one-time funds? How much are they? How much do they change from year to year? I'm just trying to get a sense of the extent to which there's stable sources in the denominator for that calculation.
The overwhelming amount is stable. So we might have one-time revenue sources, for example, the American Rescue Plan Act funding. I think in one, because of the effects of the pandemic, we used $13 million in 1 year, but as a share of a $360 million general fund budget. That's relatively small. And that's relatively unique as well in terms of the size of that. In the 2023 budget, I think we have some one-time tax increment district surplus funds that were used as part of the budget. Again, a very small share of the compared to the overall size of the budget. And then there are much smaller one-time amounts that might be spent for certain types of equipment or an experimental program. It's only one in place for 1 year. But again, it's going to be under, probably under 5% of the budget, and probably much less than that from year to year.
It affects that percent, that ratio, though. Is there a way to get that breakout for like last year and this coming year?
We can, but again, it's going to be probably 0.1%. So
okay. Thank you.
Thank you, Alder. Any other questions? Seeing none, then we'll go into the agency briefings. Our first agency is the library. And so Director Nichols is here and Christine is sharing the slides. Go ahead, Greg.
Good evening, everyone. As was told to you about the time limit, I'm just going to hit a couple of the highlights of our capital budget for Madison Public Library. The first one was the funds that we had requested for our central library for green and resilient projects. That was moved to engineering by the mayor's executive budget. I greatly applaud that move by the mayor. Essentially, these are energy improvements that we would be doing at Central Library. It involves an expansion of our solar capacity and also doing a conversion of our existing lighting to LED. This is highly coordinated with engineering to begin with. So putting it with engineering really simplifies it for us and makes it more impactful. The second highlight also has to do with Central Library. The picture that you're seeing on the slide is actually Central Library 10 years ago, opening day in September of 2013. So what we're going to be doing in consecutive years is to begin to do a refresh on this. The funds that we have allocated in the executive budget in 2024 will be an initial focus just on safety. And what that looks like is our facilities has made the recommendation that currently our PA system is functioning through our fire alarm system. And what we learned from that is that it could potentially cause false alarms and also put stress on our fire alarm system. So one of the first projects we have lined up with the funds allocated in 2024 is to install a separate PA system, which is used extensively to inform patrons and staff for information throughout the day. Next slide, Christine. And of course, the major project within the library's portfolio is the Imagination Center at Rindall Park. The Imagination Center is a joint project with City Parks. It's the co-location of a new city library and a new park pavilion for Rindall. On the slide, I'm giving you a brief history of the project. It was originally budgeted in 2018. As we went through the design process, we tried to keep as best as we could within that budget parameter that we had set in that year. We came out of pre-design and we met the budget at that point. That was in 2021. But as we completed our schematic design, which just recently happened, the estimates course, due to cost increase with construction costs, supply increase. And in this particular case, just a slight increase in square footage. In pre-design, we were at 16,000 square feet for combined facilities. Right now, we're at 17,468. So that had an impact on the budget. So we made the request to the mayor's office, and it was fulfilled in her executive budget to cover an estimated overage of $2 million. And that's what I have. Are there any questions?
Thanks, Greg. Questions for library? Alder Verveer.
Thank you, Mayor, and thank you very much, Greg. Of course, Greg, I have to start by remarking on your announcement recently that you will be taking a well-deserved retirement from us early in the new year. So this being your last capital budget hearing, I just wanted to say, and I'll embarrass you again, I'm sure, at the operating budget hearing, and hopefully again before you leave us at the council meeting. But anyway, I just wanted to make the obvious comment that the 11 years that you've been our director has been absolutely unbelievable in terms of your vision for the library system. It's just been incredible. You've done things that I never would have even imagined. So thank you, thank you, thank you. And that's a segue into my topic of question, which of course is my beloved Central Library. My first experience, of course, when you came to Madison was working with you on the new and reimagined Central Library, including the bubbler and so forth. Also, how we were able to get Brian Cooper here to Madison, and I see he's in the meeting right now. So obviously the Central's beloved to Brian too. So as it relates to moving forward and the delay with the Imagination Center at Ryndahl and its timing, obviously that has been a key factor in capital budgets the last few years of Central versus the Imagination Center, and I've been supportive of the Imagination Center since day one. So my first question, Greg, is with the $150,000 to upgrade our PA system for safety reasons, and realizing that the green projects have been moved to Brian's budget, could you just to confirm, is every dollar of the $150,000 in the executive capital budget needed for the PA system, or could it also be used for any other purposes, or is it completely spoken for?
We don't have price estimates in yet, Alder Verveer. We anticipate that the bulk of that would be taken up by a PA system, but any remaining funds, there's plenty of projects to do with Central Library. It's showing a little bit of age at 10 years. So any of those additional funds that are remaining, we do have areas that we can continue to make improvements on.
And so thank you, Greg. So with the executive capital budget as presented, when was the current thinking, and again, sadly, you won't be here to lead this, but when was the current thinking that we would have the community input, the work with the stakeholders on pre-design to create, or I should say, continue the welcoming Central Library moving forward after the date of usage? When do you think, with the current SIP as presented, when would that pre-design and conversation with the community occur, given the Imagination Center scheduling and your staff capacities and Brian Cooper's staff's capacities?
That's a great question. Initially we looked at it as a continuation of the project from beginning in 24, extending into 25 and beyond. I think, Alder Verveer, where we would include the community at the most is particularly when we're looking at engaging a designer. So doing an analysis of how our space was originally purposed for programming, and then begin to engage a designer about how some of the spaces might be repurposed from its original intent. And it would be at that point where we would gauge the community for their input. At the level of funding we have now, what we elected to do was prioritize what our top items would be, installing a PA system and some of the other small fixes that we could make at this point with the funds available wouldn't require community input. So it would be when we begin to get into that designer phase of how do we possibly repurpose some of the space within the existing central. So I wouldn't see that happening until 25 or later at this point.
And that would include, for example, reimagining the teen section that hasn't really ever caught on based on my observations.
That's an excellent example. The anticipated usage of that space really never materialized, and it's prime property within the main floor. And so I think there's a lot of potential that space could be repurposed for better reasons.
Mm-hmm. And then do you know, Greg, has the Madison Public Library Foundation at this point, their board made any commitment to Central's renovations at this point, including perhaps assisting with the design, the funding for a designer?
I've had preliminary talks with the foundation, and I anticipate that there will be opportunities for private funds to go to some of the projects that will be identified in the refreshing of Central Library. Obviously our focus right now in fundraising will go toward the Imagination Center, and the private dollars allocated for that will be our initial. But there was huge community outpouring in support of almost $9 million for Central Library when we did it. I feel there's still a deep commitment by a number of people in the community that want to continue to support it and keep it looking as welcoming as it was in the last 10 years. So there will be some capital dollars asked for. What they'll be allocated for at this point, we haven't been able to identify that.
Yeah, thank you. I concur with your vision. I think that there will be great community support to help with some of Central's upgrades. And then is there, in your mind, have you and your colleagues, Greg, come up with a staff list of what the next safety upgrade might be or other upgrade for Central, that if you did have additional resources that would make sense to do before we have that designer phase of the broader reimagining of the facility? For example, obviously, and I don't want to put Brian Cooper on the spot tonight, but tomorrow when his budget is up, I can ask him how the green improvements like the LED lighting upgrade is going to be able to occur before we've reimagined Central and questions like the timing and interface of the green upgrades. But let me just give you one example, and maybe this will be my last question of you then. So I've had frustration working with your excellent staff using the community room because of the horrific AV system that you're well aware of in that room. And it's been problematic for a while now, and seems to perhaps be on using bandages to keep it together. Is there funding to upgrade the community room AV system sooner rather than later? Or perhaps it's been upgraded, since I last used that room a few months ago for a neighborhood meeting that I'm not aware of. So anyway, so specifically the community room AV system issue, and then beyond that, is there a wish list that you could share with me beyond the PA system replacement?
Okay, well, I'll get to the good news first, and that's we've been able to do a variety of technology upgrades already, thanks to foundation funds within the community room. Our main projector, which was just woefully inadequate, has been completely replaced, where now you can actually see things on the screen. So that was a great move. And we're beginning to work on the other enhancements for our sound system that we've already asked the foundation to support. And we'll be moving on that in January. So we've made improvements. I'd welcome you back. I think you'd have a much better experience now. And we'll continue to work on that. It's a heavily used room. We're also going to be incorporating ways to generate broadcasts from there, particularly for our author presentations and for a variety of other events to be able to broadcast it. So we've been working with City Channel on that capacity as well. As far as a priority list, I have been working with our facilities manager and coordinating that with the library's mechanic about some of the infrastructure aspects of improvements to Central Library. So we are creating a priority list beyond those things that would not require a designer. And then we'll need to, in later times, bring on a designer. I think would be beneficial that really has an understanding of the space and how we could begin to repurpose some of that space.
Thank you very much, Greg. I look forward to seeing such a list from you or Mark Benno in the future, and really appreciate the great news with the generous support of the foundation that the community room is a much better AV situation. So thanks for that great news. Appreciate it. Thank you, Greg. Thank you, Mayor.
Thank you, Alder. Are there other questions for library? Seeing none, then we'll go on to Monona Terrace.
Okay. I just want to bring up that year 2024 is our 10-year renovation. 23, we built up some of the items that we would need to be installed for 2024, but we do have some items that we still needed to purchase for this year as well. I guess the biggest change that we had from what we had submitted previously in 2022 was a cost increase in the carpet installation, which was caused by a couple of factors, one being cost of labor increases. And then secondly, we did not do the lecture hall 10 years ago because it really the carpet didn't need it, but the carpet needs it now because it's, 20 years old. So that was most of the cost increase, which in total was $245,000 additional. They have to remove all of the chairs, remove the carpet, put new carpet down, and then put the chairs back, which there's 315 chairs. So that just cost a lot more to do. We did try to offset some of that cost by not replacing the carpet in the offices. And then some of the other projects that we're going to be doing that are bigger are window replacement, mostly on that front side facing the lake, which we have been had an ongoing program of replacing them. Every year we have them inspected and figure out which ones are the most dire in need of changing. So some of that will be happening. Let's see, carpet installation, again, is the biggest one. We have beehive lighting, which are those globes that are up on the rooftop that are custom made and are all 20 some years old. Some have been replaced that leaked previously, but the rest are 20, 25, 26 years old and are in need of replacement. And then we have some lighting upgrades that are like major lighting upgrades that need to happen, digital signage upgrade. And then exhibition hall lighting and power upgrades. kitchen floor, same thing. It was replaced 20 years ago and is in dire need of being replaced again. So those are the big things in the building and building improvements section. And then in the machinery and other equipment, it's, smaller items like rope and stanchion, fire pump control, system upgrade, carpet cleaning or extraction equipment. And then we are replacing all of our recycling and trash containers, which are also 20 years old, and we've repainted them 3 or 4 times to extend their life, but now they're just in sad shape, so need to be replaced. And I think that's it. If anyone has any questions, I'd be happy to answer.
Thanks, Connie. Questions from Monona Terrace? Going once. Going twice, seeing no questions. Thank you, Connie. And we will move on to planning.
Thank you, Mayor and members of the Finance Committee. My name is Heather Stouter, and I'm the Planning Division Director. I have one simple yet impactful capital budget request that has not changed in the past few years. It's for our Municipal Art Fund. And I want to thank my colleague, Karin Wolf, the Arts and Culture Administrator, who implements this fund and many other projects across the city. Our Municipal Art Fund request is for $160,000 a year, and I wanted to provide this breakdown just to show a rough estimate of how this money is spent on an annual basis. So about a third of it is actually spent on our Arts and Culture Administrator's staff time as a portion of their salary. And then about a third of it is spent on the Art in Public Places program. And this is really where the bulk of the funds are spent for prominent arts projects that aren't otherwise affiliated with public facilities, or are over and above what our percent for the art program pays for in our public facilities. In 2024, the 2 primary projects that will likely see expenditures within this realm are the Darbo Drive Public Art Project with a great partner, Austin Brantley. We're partnering with Madison College on a sculpture project in that area. And then the Public Market Project, it will likely be a series of art projects in the Public Market building, one of the more visitable public facilities in the city. And then the other third of the funds are spent with a mix of our Artist in Residence program, which I'm displaying here on the lower left. We have a small warehouse building in Thurber Park on the east side, still in the town of Blooming Grove, where we have an Artist in Residence involving area residents and having some open studio hours to basically engage with the community as they utilize the space for their own art. And then smaller amounts of money on the Madison Municipal Building and City County Building public art rotation, and importantly, conservation efforts, about $20,000 per year, loosely budgeted for conservation. All of the decisions on the Municipal Art Fund are made by the Madison Arts Commission. Next slide, please. Just wanted to ground the Madison Municipal Art Fund in the comprehensive plan, strategies, and actions. As you can imagine, all lie within the culture and character element of the comprehensive plan. We want to strive to integrate public art throughout the city with a special focus on equitable geographic distribution and incorporating the work of artists that really reflect Madison's diversity. And then strategy 7, provide opportunities to learn about, create, collaborate, and enjoy the arts. We want art to be a dynamic and important experience for Madison's residents. And again, a part of that is promoting local artists as they're able to be involved and actually funded by the city for their artwork. That's where I'll leave it this evening. I'm happy to take some questions if there are any. Thank you.
Thanks, Heather. Alder Figueroa Cole.
I'm sorry, I got confused for a minute. Why is this on the capital budget instead of the operating budget?
Great question. So the Municipal Art Fund is really focused on actual capital assets of the city. So it's our long-term art-related holdings citywide. We also do have streams of funding in our operating budget for arts grants, and those are for art projects that really support local artists, but they're not maintained as part of the city's art collection over time. So it's a really important dividing line. Again, with the Municipal Art Fund, these are projects that the city owns and maintains over time.
Thank you.
Thank you, Alder. Alder Bennett?
Yes, over the course of learning more about our arts program, I am wondering if our current budget amount for staff is enough, and if additional staffing requirements are needed either now or in the future.
Sure, great question. So I think at this point, I would say that we're staffed at roughly 2 full-time employees, and that's with our arts and culture administrator as a full-time staff leading the programs. And then we do have about, I'd say, a third of another staff person's time, a little over a third of a third person's time, and then a few others who get involved in art projects here and there. I would say that really within the capital budget, which is what we're here to discuss tonight, we're at a good level within the Municipal Art Fund. And part of the reason for that is because we actually, the city has a percent for the arts ordinance that helps to provide the cost for additional artwork affiliated with public projects and public facilities. So the Municipal Art Fund is actually just a small, it's an important piece of our overall tangible art program. If the question really is whether we need more staff to boost and make more prominent our arts program, absolutely yes. We could certainly utilize that, but that would be an operating budget question and probably not the capital budget.
Okay, thank you.
Thank you, Alder. Are there other questions for planning? If not, thank you, Heather. We'll go on to the CDA redevelopment.
Good evening. I'm going to cover a couple of the major project changes for CDA redevelopment. The first is the Triangle redevelopment. So this summer, the CDA completed a master plan of the Triangle, which was adopted by the CDA board. And that was the result of a year-long process of examining the assets on the site and doing robust public engagement with residents on the site. And the plan calls for roughly 1,200 units of new housing to replace all buildings at the Triangle. This will be done over the course of roughly 5 phases. And the total project is roughly $300 million. The project that's in next year's budget is the first phase, which calls for the replacement of Brittingham Public Housing on a vacant site in the middle of the block. And this housing will be funded by a combination of, largely by Section 42 tax credits, but it will also utilize the TIF district that's in place there, some CDA reserves, and then there's also affordable housing funds that don't really show up in this budget. They show up as in the Community Development Division's budget here, and it's would be loaned to these projects. Next slide, please. And then the second major new project is just generically called South Madison Redevelopment, but this is the corner of Badger and Park Street. So over the last few years, the city of Madison, through land banking, has acquired a number of parcels. So we have the former South Transfer Point, the Centro Hispano building, which they are in the process of constructing a new site on the corner and will be moving out next year. We've purchased an office building on Badger Road. And then we also have the South Madison Police Station. So altogether, this is roughly 4 acres. And what's envisioned for this site would be that the CDA would serve as a master developer to develop roughly three buildings on the site. So on the corner where South Transfer Point sits, we're looking at an affordable housing focused mixed use building, but the primary tenant of the first floor would be a new public health clinic to replace the clinic that's at Village on Park, one block to the north. Then if you move to the west where Centro Hispano and the office building sit, we would do a second mixed use building, again with housing above. And on the first floor, we would have a new Fire Station 6 to replace the fire station that is directly across the street. And then future phases could include replacing the police station with another housing development, but that would be in the future. For the purposes of this budget, we're really talking about design and planning for the southern two parcels. And this project is included in the TID 51 project plan. So this is really utilizing that TIF district to pay for the housing components and planning here. So that is CDA redevelopment.
Thank you, Matt. Alder Figueroa Cole.
Thank you, Mayor. I know, Matt, that you said this is for the future, but is it in the future plans for that new redevelopment of the police station to also contain the space for evidence facility like they're asking?
No, so we would in the police budget, you'll see a combined new police station with the evidence facility, and it's envisioned that would move farther to the west where the current town hall building is from the old town of Madison.
Okay, so I'm sorry. Can you repeat? So do we found a home for the evidence?
Yes. So there's a lot of moving pieces. Okay. So we currently we have the town of Madison town hall site on Fish Hatchery Road. So engineering has been working to do test fits, and we believe we can fit the evidence facility as well as relocate the police station to that site.
Thank you.
Thank you, Alder. Any other questions for CDA? Alder Harrington McKinney.
Thank you very much, Madam Mayor. Matt, when you were describing, thank you, wonderful presentation. When you were talking about the triangle development, you mentioned the supporting financial elements, and then you said loan to this project. And so could you clarify what you meant by that? You said you were naming the various allocations where fundings were coming from, and then you made this statement, loan to this project. I think I missed something there.
Oh, sure. So we're using a mixture of funding sources to fill the financial gap. Again, because this is a replacement of public housing, they're all 30% AMI type units. So it has a fairly substantial financial gap even after the tax credits. And so what we're proposing to do is use the existing TIF district as a source. The CDA at the triangle has reserves that we could apply to it. But then for the remainder of the gap, what it's going to show up as in the budget, it's called developer capital funding, which is not very descriptive term. But what that really is that's a loan from the city's affordable housing fund into the project. And that project would be able to repay that through cash flow, through developer fee, those sorts of things, back to the city. And I will note that the financial gap that we're showing on phase one is rather large at $11 million, but we are actively working with HUD to increase the operating subsidy that would come to the site as part of redevelopment, which would allow us to do more traditional bank financing and reduce that gap. But that's not a fast process to work with HUD to get that to happen. But we are actively working with our HUD office on that.
Okay, thank you very much. But as this develops and then you report on the financial structures going forward, these intricacies will be further developed. At this point, it's just a catch-all phrase in terms of where the monies will be coming from.
Yes. So we are working towards a January 2024 tax credit application. And so between now and then, we'll continue to refine these budget items.
Okay, thank you very much.
Thank you, Alder. Alder Revere.
Thank you, Mayor. Thank you, Matt. Matt, I have a question about the very exciting South Madison redevelopment, and in particular, the inclusion of a brand new fire station number 6. As you're probably well aware, we invested substantially not that long ago in upgrading Station 6, most importantly, to provide more gender parity for the firefighters, paramedics working there. But then beyond that, we expanded the scope and invested more money in that. So I'm curious, how long has a brand new Station 6 been under consideration as part of the South Madison redevelopment? Because I certainly, as a policymaker, wasn't aware that Station 6 would be moving in the perhaps near future here.
Sure. So I'll speak for Brian Cooper, but he can jump in to correct or add anything. So we designed and bid the work that you're describing at Fire Station 6, but that work never actually happened. The bids came in significantly over what was estimated. And when we went back and looked at the building, what we determined was constructing a new Fire Station 6 was not substantially more expensive than renovating the existing Fire Station 6. So that work construction that you're describing never actually happened.
Oh, thank you. That obviously is news to me. So Brian, thanks for turning your camera on. And I'm sorry I invoked your name so often with Greg talking about our beloved Central Library. But anyway, so Brian, can you elaborate on that? Because did we at least do the work for the female firefighter paramedics at Station 6? And it was all the other upgrades that we were considering that were apparently overestimate and the bids were all rejected? Or can you provide more information, please?
Yeah, so I guess it was 2021, we did most of the design work. And then in the spring of 2022, we attempted to bid the project. And really, I would say that was the kind of initial project where we've been on the streak of having a hard time getting bidders and bids that are within estimate since that time period. And that was really one of the first ones. It was significantly over. I cannot remember at the moment, Alder Revere, what the exact number is, but it was significantly over by millions, I believe. And then, so we did not proceed with any of the major work that was represented in those bid documents. So to date, Fire Station 6 is pretty much in the state that it has been for years at this point. Of course, we maintain it, right? And we do improvements to make sure that everything's working properly, but there's no remodel that has occurred or addition or any upgrades other than just the annual maintenance work.
Oh, I obviously had no idea. So including what was most compelling to us when the former chief identified that the female firefighters there had kind of subpar, if you will.
Correct. Yeah.
At facilities compared to other stations. So
correct.
You never even did any work in that regard.
Correct. I believe they have some temporary resolution to that they've been living with for years. But it's suboptimal compared to what we would do in a new facility.
Can I suggest that this is actually in the fire capital budget? We could talk.
Yeah, we could
to fire about it when we get there.
I appreciate that, Mayor. Thank you. And I'll yield, and I see that Chief Carbon's been here from the beginning. I do have to disclose, I'll say it now instead of at 7. I have to, unfortunately, maybe won't be unfortunate for many of you, but we'll be taking leave at 7 o'clock for a Bassett neighborhood meeting where we're discussing the horrific assault that occurred in our neighborhood recently. So I will be taking leave at 7, and I will likely miss Chief Carbon. But anyway, thanks for Matt and Brian. I appreciate that information very much. Thank you, Mayor.
Thank you, Alder. Alder Harrington McKinney, I believe your hand is still up, but happy to put you back in the queue if you still have a question. Alder Govindarajan.
Hi, quick question. I think I know the answer to this, but I'm going to ask just to clarify. The triangle that's taking place, I know because of the funding source, most of that or any of that cannot be allocated for student housing, correct?
Correct. So it's currently public housing, and through redevelopment, it would flip over to Section 8 vouchers. And really this first phase is just replacing existing units. So it would be for the current residents first. But as we get to those future phases, to phases 4 and 5, actually 3, 4, and 5, we will have replaced all of the units, and there's more flexibility. So the current master plan calls for a lot of it to be tax credit financed, but some of it could use like a bond product, or could be closer to market rate workforce housing. But the current master plan does not contemplate dedicated student housing. But again, those future phases are, because they're 5 years in the future, there's a lot less detail about exactly who would live in them.
Perfect. Thank you.
Thank you, Alder. Alder Slack.
Thank you. Just a quick clarifying. Am I understanding correctly? There's no requests for any monies for land banking.
Correct. So we own the whole site at this point that we're discussing for the master plan. Yep.
But I mean, elsewhere in the city, I'm not just talking about this project.
So there is land banking funds, but they don't exist in CDA redevelopment's budget. That sits in economic development's budget.
Okay, thank you.
Thank you, Alder. Are there other questions for CDA? If not, thank you, Matt. We'll go on to community development.
Thank you, Mayor and members of the council, for the opportunity to present the Community Development Division's 2024 capital budget. And I want to thank you, Mayor, for your favorable response to the division's requests for 2024 and through the course of the SIP. The executive budget continues to prioritize continuing efforts to expand the supply of affordable housing in Madison, a goal that I think we can agree has broad support among city policymakers. Specifically, the executive budget calls for a more than $30 million increase in the Affordable Housing Fund over the course of the SIP compared to levels authorized just last year. That follows other smaller increases approved over the past several years. Last year, for instance, the fund's annual budget authority was raised to $10 million, more than twice the level at which the fund was originally established in 2015 and at which it operated for the first 5 years of its existence. $10 million of the $30 million increase will come from the recently created Tax Incremental Financing District 51, which was established to support development efforts in South Madison. And so its use will be limited only to support future affordable housing projects that occur within the boundaries of that district. And as I think as Matt mentioned earlier, those plans and that funding is reflected in the expenditure plan for TID 51. So the balance of the increase then would be available for use anywhere in the city. In general, CDD uses affordable housing funds to support 3 distinct categories of development projects. The largest share does and always has gone toward developments that plan to take advantage of federal and/or state low-income housing tax credits. We solicit those proposals through an annual, usually run during the summer, annual request for proposals process. We're in the midst of one right now. Historically, tax credit developments have been the bread and butter of the Affordable Housing Fund. When the fund was created back in 2015, the city's explicit policy was to use city dollars to leverage those tax credits in order to maximize the impact of our own investments. And in a minute, I'll come back to that point. I want to show you how that strategy has paid off. In the first 6 or 7 years of the program, these were the only developments that the fund supported. But in the last 2 to 3 years, largely at the urging of the mayor and the council, the fund has been asked to also support other types of developments, that is, non-tax credit developments, developments undertaken by nonprofit organizations, smaller scale, what we sometimes refer to as missing middle developments, etc. We solicit these types of proposals through a separate RFP process, what we have come to call the Housing Forward Development RFP, and we run that process every other year. Finally, we draw on affordable housing funds to support development opportunities that involve properties owned or under the control of the city or the CDA. For example, affordable housing funds will help redevelop a handful of CDA properties in the Teresa Terrace neighborhood. They will be part, as Matt mentioned, of the much larger planned redevelopment and expansion of the CDA's Triangle properties. And it's certainly reasonable to expect that as the city acquires more property through the Land Banking Fund, the demand for affordable housing funds to help develop them will also grow. So beyond reflecting the provision of funds from TID 51 for affordable housing developments that will take place in South Madison during the next several years, the authorized spending levels contained in the executive budget provide the means to respond to development activities across these 3 different project categories. And so in a sense, they won't have to compete or vie against one another for funds. And I want to say that at these levels, we're comfortable that they can all be managed within existing staff capacities. 2 other quick points about CDD's capital budget. First, the executive budget adds $2 million to already approved spending for the new men's shelter. The added funds primarily reflect costs associated with space needs for daytime services and to install a backup generator to ensure the facility and its users are not susceptible to interruptions of power. $1 million of that increase is to come from GO borrowing. We anticipate recouping a second $1 million from federal energy rebates. Lastly, budget lines in CDD's capital budget, one providing funds to deal with maintenance needs at city-owned temporary shelter facilities, the other to deal with a series of mostly minor building improvements at the Madison Senior Center, have been moved from the community development budget over to the engineering department's budget in facilities management, where funding for other city facilities reside. They do the work in engineering. Brian and his team, we agree it makes sense for the funding to reside in engineering's budget, and so that is what is presented in the executive budget. So before I close, and Christine, if you could go to the next slide, I want to come back briefly to the Affordable Housing Fund. When it was launched back in 2014-15, it came with a 5-year goal of helping to create 1,000 new units of affordable housing. The city's policy, as I mentioned, was to leverage federal low-income housing tax credits. At that time, there were no state credits to boost the impact of city funds. Now, 9 years in, that strategy has had its intended results, and this slide summarizes some of them. To date, 27 developments have been supported through the fund, 21 of which have been completed. Together, the total number of new rental housing units produced is approaching the 2,500 mark, and the number of those that are income and rent restricted for households earning not more than 60% of the county median income is nearing $2,000. And we are confident that we will easily surpass those thresholds, both of those thresholds, with the batch of new proposals currently under review and which we will be bringing to you for your review in coming months. Let me draw your attention to the pie chart. It demonstrates just how effective the fund has been in leveraging other investment. These 27 projects represent more than $575 million in total development costs. The city's $36 million contributions to them represents just 6% of that total. 40% comes from tax credits, and more than half from other funding sources. A little bit of that from Dane County and the Federal Home Loan Bank, but mostly from private equity and private mortgage sources. Put another way, for every dollar of city funds put toward affordable housing developments, we attract about $6.50 of tax credit equity and nearly $9 of outside investments. So I thought it was important as we talk about continuing to expand this resource that we share some of the impacts that it's had, especially in terms of attracting other investments in our community. Mayor, I will stop there and be happy to try to answer any questions.
Thanks, Jim. Questions? Alder Govindarajan?
Thank you, Mayor. Quick question, and I'm sorry if there's background noise as well. But for the Affordable Housing Fund you were talking about, do you know how much of that could have potentially been used for student housing, if at all?
Well, Alder, there's nothing that precludes the use of affordable housing funds for student housing, student designated housing. But as we have used those funds, as I described, to leverage those federal low-income housing tax credits, student housing is not an eligible use of those tax credits, and so the strategy that we've used would have prevented that use. But otherwise, there's nothing inherent in the city funds that preclude their use for student housing.
Okay, thank you. And I do apologize for the echo. I'm just in a really loud spot on campus. And then the third bullet point also said that it can be used for areas owned by the city. So, for example, would the Affordable Housing Fund be able to be used for the Brighton lot development that's coming up?
It certainly could, yes.
Okay, thank you.
I muted myself to help with the echo, but thank you, Alder. Alder Rummel?
Thank you, Mayor. Hi, Jim. I'm glad you pointed out that the non-tax credit development process is every other year. I wasn't sure I was truly aware of that fact. And I can imagine that part of that is driven by what as you called it, our staff capacity. So can we pick that apart a little bit? Is there any capacity to have an annual thing, or is it just so much to do those RFPs that there's just no more space in people's brains? And then I'll have a follow-up question to that.
Well, Alder, part of the rationale has been part of the problem has been the sort of the competition for resources as we've split resources among the different uses. We haven't wanted to deprive the tax credit developments of too much in the way of resources. So that's one part of the rationale. Another part of the rationale is the fact that these tend to be smaller development proposals. They tend to be more likely to involve nonprofit developers and maybe less established developers. Therefore, they tend to require a little bit more technical assistance from staff. And then the staff developing capacity is probably a third consideration.
Thank you for that. So one thing that I have run into, it's only one thing, but it started me thinking, is if there's a developer who's not really traditionally one that does affordable housing, but as Alder, push, try it. There's, WIDA, other loan programs, there's the Affordable Housing Fund. But now it sounds like I could not direct that individual to apply because the timing wouldn't work. And I guess my question is, what's the advice you could give to us as we try to leverage all these developers who are, know there's a need, but aren't sure they know what they're doing or don't feel it's their wheelhouse, et cetera?
Alder, I think the best advice that I could ask you to offer to developers in that position would be to work with us, to sit down with us to discuss development plans or specific proposals. We may have advice that we can offer in terms of other resources that can be leveraged. It's pretty difficult in this city to develop affordable housing of any scale without outside funding over and above city affordable housing development funds. So our staff are pretty knowledgeable about what those other financing tools are, and I think we could be helpful in that regard. We could be helpful in terms of helping a new developer navigate through city approval processes and so on. So my best advice would be to get us connected to somebody in that position sooner than later.
Right, because it's not a new developer, it's just one that's only gone through the land use approval process, not the community development approval process. And my final question is, I almost feel like I know what you're going to say, but I thought I must ask, is, in your little note in your asterisk, it says, affordable housing, and our goal is 60% AMI. Is there any flexibility where that could be less or more? I mean, that could be less, obviously, but are we so strictly, that's our bottom line? And the reason I ask is, even the WIDA Section 42 has a range of affordability from, 0 to 30 up to 110%, with a certain number being at that 60% target. So I'm just wondering, how does that work for this other non-tax credit section?
So Alder, you tell me how am I going to answer that?
You're going to say how important it is, and that we get, really something that means something.
So you're right. The income thresholds that we as a community struggle to support more than any other are those lower income thresholds. We have to work very hard to encourage developers to provide units that are dedicated to households earning less than 30% or less than 50% of county median income. So this is where we can have the most impact, is in these lower thresholds where, frankly, nobody else is really much involved, and that's mostly why we're there. Most of these, or many development proposals, though, do come with a mixture of income thresholds that they support. And so we can, and we do, routinely support development proposals that serve households earning above the 60% threshold. But we tally in our column only those that are at or below the 60% mark.
Great, thanks. That's all my questions.
Thank you, Alder. Alder Bennett?
I think my question builds upon what Alder Rommel was just asking, actually. I noticed in our 2023 housing snapshot report, that is still a draft, that it seems like there's a greatest need of those at 30% AMI, and if those at those at or below 30%, and those at or above 80%. So I'm wondering, like, if there's ways that we can earmark funds within, like, the Affordable Housing Fund specifically to those, like, that are harder to reach with that, specifically that 30% AMI threshold.
Well, right. That's exactly what we're trying to do. And as some of the some of the financing tools, and I mentioned specifically the movement away from 9% tax credits, which are really where all of the action was in the first 5 or 6 years of this program's existence. That is slowly but surely moving away in favor of 4% tax credits, which are, as you might imagine, less valuable to developers in terms of the equity that they can generate, sometimes used in combination with state credits, which help a little bit, but the impact of that movement away from 9% and 9% and in the direction of 4% credits is that the nature of the developments themselves are changing. They tend to be larger developments than the 60 to 80 unit. That is the more traditional profile of the 9% credits. And they tend to serve the higher range of the affordability spectrum. And so we have to work harder. We have to do more to encourage and provide incentives for developers to serve those lower income thresholds.
Mm-hmm. And then I really do appreciate that we're trying to target those 4% credits as well. I mean, I think it's a great program either way, with the 9% or the 4%. I do, however, have if not, I don't know, I don't want to say it's like a concern, but more of an inquiry. And I think Alder Harrington McKinney's mic is on, which is causing the beeps. But so with the 4% credits, there isn't, because it's non-competitive, there aren't as much like regulations that the developer has to adhere to, and like controls that could like regular inspections and all of that type of jazz. I'm wondering, like, if there are ways that staff has identified that they could like mitigate issues that may arise with decreased regulation with the 4% credit.
Well, Alder Bennett, I don't know that there are. There certainly are substantial regulations and controls that accompany even the 4% credits. I think the biggest difference is that it is to the income thresholds that those credits support, as opposed to the more valuable 9% credits. So it isn't so much a matter of getting out from under regulation or control, as it is addressing a different segment of the lower or moderate income thresholds.
Yeah, I think like my question, I shouldn't have said regulation, but it's more in relation to compliance periods, like compliance standards that some 4% credits don't have to adhere to, which could lead to problem areas. But I'll just connect with you after this. But yeah, thank you.
Thank you, Alder. Alder Slack.
Thank you, Mayor. And Director O'Keefe, Is there potentially a greater benefit to be had with respect to increasing the number of more affordable units by putting more money into our land banking budget so that we have more control over the price points and more ability to form partnerships with nonprofit developers?
Well, I think the answer to your question, Alder Slack, really goes to the second part of your question. To the extent, I suppose, that we would exert more control over who develops and the nature of the developments in or on properties owned by the city, or for that matter, the CDA. Yes, I suppose we could exert a bit more control.
Thank you.
Thank you, Alder Revere.
Thank you, Mayor. Thank you, Jim. Jim, speaking of tax credits that obviously have been discussed, widely here in this space, I wanted to ask about tax credit properties that are expiring. I've experienced, personally, since I've been on the council a very long time, a couple of Section 42 projects downtown that have unfortunately expired their period of affordability. In one case, we were able to keep the affordability going. In the other case, not. Do you and your colleagues maintain a list of monitoring of when Section 42 projects in our community are nearing their periods of affordability? And if so, how extensive of an issue is it, do you believe?
So the answer to your first question, Alder, is yes, we do. In fact, I looked at that list just earlier today, so I know that it exists. I can say too that there was prior to the creation of the Affordable Housing Fund, there was a relatively small number of development projects undertaken in Madison that avail themselves of tax credits. Not none, but not the volume that we've seen in more recent years as we've made that concerted effort to leverage that funding source. So they're out there, and we know where they are. We know when their periods of affordability are set to expire, and it is part of our strategy currently to be in contact with the owners of those developments, to work with them to try to convince them to maintain or extend that nature of the projects, the affordability.
That's very good to hear. So that's something that you or Lynette or others on your team regularly have been engaging in for some period of time.
It is, yes.
Would you say it's a extensive issue in terms of how many are on that list that you just reviewed today?
It's a handful.
Even one is too many, I'm sure, for the affected tenants. But.
Yeah, I was just going to say that we can't afford to lose any affordable units, so we're monitoring them. We're reaching out to developers, and we'll do everything we can. We obviously can't mandate or control how developers or how property owners choose to proceed, but they'll know that we're interested. They'll know that there are resources that might be available to help maintain that affordability. It's a handful of projects in coming years, Alder Revere. It's not a dozen. It's not even a half a dozen, but a property here, a property there.
Thank you. I'd appreciate it if you could share that list with me in the future at your convenience.
Sure.
Thanks very much. Thank you, Mayor.
Thank you, Alder Harrington McKinney.
Thank you, Madam Mayor. I have two questions, and Jim, at the end of your presentation, you shared a pie chart showing the impact of the spending allocations, and I'm wondering if there is a pie chart that shows what areas of the city these spendings occur. Is that possible, or is that something that you already have in your department?
So it's not a pie chart, Alder, but we do have a map that shows where each and every development assisted with the Affordable Housing Fund is located. And I'd be happy to share that with you.
Excellent. Thank you very much. Yes. And I had the opportunity to be over in the area of Fire Station 14 this morning, and right across the street, of course, is the temporary shelter housing complex of those 30 individual complexes on Dairy Drive. Is there any plan to increase that number or support that? And I want to make sure that I'm in line asking about that specific location.
No, Alder, there are no plans to increase the scale of the Dairy Drive campground.
Okay, all right. But the city will continue to support that complex. Is that correct? That will be in the operating budget?
Those funds will be in the operating budget, McKinney. I would hasten to add that they are derived now almost entirely from American Rescue Plan Act funds. And so those funds are being rapidly depleted. And we're monitoring very closely what that campground needs and where we might be able to get funds to sustain it for as long as we can.
Okay, then I guess I will talk with you out offline, because I really want to find out where they are financially and what would be the possible opportunities for expanding that, and then, where would those individuals go? So I'll talk with you offline about that. Thank you very much. I'm complete.
Thank you, Alder. Alder Latimer Burris.
Yes, thank you for this presentation. I guess a lot of the alders asked a lot of questions I was going to ask, and I have some just, pointy questions like the compliance 49%. That's also, those properties are Section 42, and then the time period for when the buildings come about, I think that's 10 years. So I can ask you those questions later. But I wanted to just talk a little bit about two issues. One is the housing forward. So I'm surmising that the next time that's available would be the next budget session. How many units or properties come out of that, or have, typically in a year? And then also, can you expand a little bit about the, you said something at the very end, I didn't catch it all, but I think I caught enough about the private equity mortgages. And that's my two questions. And then after that, I have to go for a meeting. Thank you so much ahead of time.
Sure. To your second question, Alder, what I mentioned was that for every dollar that the city commits to a development proposal, an affordable housing proposal, we have seen historically $9 invested from outside sources, and that does not include tax credits. And those outside sources are a combination of private equity and private debt. So developers routinely secure private mortgages to help finance their developments, and that was the point that I was trying to make. In terms of the scale of production that comes from the Housing Forward. I mentioned these do tend to be much smaller in scale than the tax credit proposals, which can be for 9%. They can be in the 60 to 80 range for the 4% finance developments. They tend to be in the they can be several hundred units in size. So in the Housing Forward RFP, we're dealing with development proposals that tend to be in the dozens of units, lower dozens of units, 20 to 30 sometimes. Sometimes we'll see proposals that involve housing co-ops, and even smaller in scale. So I can't really put a total figure on those. It really varies from one process to the next. And we haven't gotten enough of these under our belt to really draw much more of a conclusion than that. But they're much smaller.
Okay, and just follow up to that. You would be able, if I reached out, you would be able to tell me how many, like is there a chart? I suppose I would imagine, that you charted out each year, as you monitor what's going on with the different projects that are coming out of Housing Forward. So it's something you could reach out.
Are you asking, could we give you information on the projects that we have supported through that process?
Yes.
Absolutely. Yes.
Okay, perfect. Thank you so much.
Thank you, Alder. Are there other questions for community development? All right, seeing none. Thank you, Jim.
Thank you all.
We will go on to economic development.
Good evening, everyone. Following is a brief presentation on EDD's capital budget proposal for 2024. And I'm joined this evening by Saran Oak as well, who can maybe help answer some questions that you may have. In terms of major changes and new programs within the executive capital budget, we've created a new general business park holding cost project to consolidate several smaller projects that we had to cover holding costs for our two business parks, CIC and the Southeast Madison Business Park. For some of the new alders, holding cost refers to the expense for maintaining property. So cutting the grass, shoveling the snow, taking care of other maintenance of these properties until we actually sell them to a developer. We are increasing the general land acquisition fund by $30,000 to cover additional holding costs given some of the additional new properties that we've been purchasing in recent years. We've added $500,000 to TID 48, which is the Regent Street TID, to cover a potential affordable housing project that we're currently in discussions with the developer regarding. We are adding $100,000 to the TID 50 State Street budget to assist with the experimental closure of State Street next year. This isn't to say that we will spend $100,000 on this experiment, but we've just included this as a up to amount to have funding available once we have a more firm budget on what that experiment will cost. And what's really exciting to us within economic development is that we've added significant small business development financial support programs to our new TID districts. This is TID 51, which is South Madison, TID 52, which is East Washington Avenue and Stoughton Road, TID 53, which is East Wilson, and TID 54, which is the Pennsylvania's Packers Corridor. And this will provide us with the opportunity to make some of our small business development programs available to businesses within these new TID districts. And this is a pattern that we hope to continue moving forward. Next slide, please. In terms of projects and programs that are continuing as in previous years and as identified in the capital improvement program, we have our Healthy Retail Access program, which we're maintaining funding in 2024. We have our land banking program, which has funding. And I should note that in addition to the land banking program within the land banking item, we also have funding within TID 51, our South Madison project that could also be used for land banking in South Madison specifically. We maintain our small business development programs within TID 50, the State Street TID, and we also maintain our small business equity and recovery program funds for 2024. And our goal is to use these SBER funds for projects that are not located within a TID district. In other words, we will use TID funds for projects located within some of the TIDs that I mentioned, and where a project is not located in a TID, we will then make the SBER programs available for those small business grants. And with that, I'm happy to answer any questions anyone has.
Thank you, Matt. Questions for economic development? Alder Evers.
Is my microphone working now?
It is.
Oh, great. Thank you. I had to reboot my computer. It just goes to show that everything works better if you unplug every now and then. So. Matt, you and I have started exchanging emails about the land banking fund, and there are people in our community, as you're probably aware, who are focusing on this as perhaps a tool that we should explore using to a greater extent. I'm aware, though, that when we start considering throwing up more money, a significant increase, that we run up against staffing issues, capacity issues. Could you talk a little bit about that and give some sense of what maybe a realistic increase of what you could handle incrementally, and maybe we could phase this in over the course of the SIP, not put it all in at once, but increase our appetite for using the land banking fund to be more aggressive in this regard?
Sure, happy to. From a land banking perspective, there's really two considerations. On the one hand, there's identifying properties that might be suitable for land banking and to assist with facilitating housing development in the years ahead. And we've purchased quite a few properties in recent years using the land banking program and using TIF district funding to assist with that effort. And that certainly takes staff time and capacity to do that. The second piece, though, is to facilitate development of those properties that we have acquired. And typically, we do that through an RFP process where we seek to partner with the developer to then come in and redevelop the property. That requires a lot of staff capacity, both within economic development, but also within a lot of other city agencies that we work with and that are critical to helping promote housing redevelopment. So we're already working on projects such as the Brayton lot, preparing an RFP for that. We're working on the Park Badger property, which is the area around the South Transfer Point. There's a number of properties that we've land banked in recent years that we are interested in issuing a request for proposal to developers. So providing funding just to purchase additional property on the one hand, is good because then we can purchase the property, we can control the property. But there is likely limited capacity for then issuing RFPs to develop all of the properties at once. There simply is only so much that staff can do it at one time. So we would run up against some capacity issues. I should also note that there are several developers that are working on or considering some very large scale housing development projects, including ones with affordable housing components. And some of those projects require staff time as well within EDD and elsewhere. So just as we are land banking property and facilitating the development of housing on our own, we need to make sure that we're reserving some staff capacity to work with private sector developers that are interested in already working on other housing projects elsewhere in the community.
Well, thank you. I understand you to say that there's probably more than two, but you kind of break up the land banking fund staffing issue in two different areas. One is the staff requirements in terms of actually making the purchases, the transactional part of it, in real estate division to actually negotiate the purchase of a parcel or a series of parcels, combining them. And then the second capacity bottleneck may be then on what you do afterwards, issuing RFPs to development. Wouldn't you agree, though, there is some benefit in taking parcels out of the speculative real estate market, even if we hold on to them for 5 years and don't do anything? At least it creates more options for us in the future. And it sounds like maybe the staff time for that is not as onerous as the staff time for the second part.
Well,
yes,
it depends on the owner and
right.
But yes,
so we may need some more staff for that portion either over time, but it sounds like something that's more manageable, the actual acquisition of property, perhaps. Anyways, I don't want to belabor it, but you and I can talk some more about it. Thank you.
Thank you, Alder. I'm going to take chair's privilege and ask you a follow-up question there, Matt, and actually might be a question for Matt Wachter. I'm not sure. When we do developments on land that we have land banked, it's my memory that the subsidy from just providing the land is often not enough to get the level of affordability that we're interested in. Is that correct? And so do we often have to go to other funds like the Affordable Housing Fund so that just land banking is insufficient to get affordability? Is that correct?
You want to go first?
I mean, yes, especially with depth. I mean, a lot of it depends on the depth and the breadth of the affordability. But yes, if we want to get very deep affordability and have significant number of units with affordability, then yes, in many cases, we would have to use additional funding sources to assist.
And add, oftentimes when we have control, we also hang other ornaments on the tree, or have to, build a street, or we care about what goes into that first floor retail component, and we end up subsidizing some of these other pieces of the site. But I do, for just a plain vanilla tax credit deal, oftentimes the land and the gap are they're close. But you're right, it just depends on the actual transaction.
Thank you. Alder Bennett?
I thought Derek was before me.
I can go to Alderfield. Alderfield?
Yeah.
Thank you, Mayor. I also have a question about land banking as it compares to the use of the Affordable Housing Fund. So we heard a moment ago from Director O'Keefe that there's a pretty significant ratio of other forms of investment that come into the community when we spend affordable housing money, just based on how the policy administering the fund is designed. And compared to that, I'm wondering if, Matt, if you or other ECD staff have a sense of the typical ratio of other investments that end up coming into development projects where the city has invested in banking the land.
I'm not sure I quite follow, so let me kind of repeat it back and see if I'm getting it. Are you interested in knowing, when the city comes into a market and land banks a property and helps facilitate development, to what degree do other developers and other private investors come in the area and have investments in other projects? Is that the question?
No, I'm asking about the parcel being land banked. I'm wondering if our investment there induces other investments in the same way. I mean, clearly a different way, but similar to how the use of the Affordable Housing Fund does.
I mean, land banking on its own necessarily doesn't do that, because when we purchase the property, we're just now taking ownership of the property. So we have now control of the property. Now, there are at times benefits to the city having ownership of property. So for example, it makes some federal EPA funding available that's only available to communities, similar with some DNR funding if there was environmental contamination. So in that case, yes, you could probably make the argument that we're then able to attract some additional funding sources into the project. But just us owning it alone would not automatically make that the case.
And beyond owning it, how about the facilitating development piece of building for example, housing on land bank property? Do we induce investment that way?
I mean, we can at times make it easier, the fact that we own it, especially if we have put together several parcels, several smaller parcels into one larger development site. That can certainly make it more attractive to the private sector to invest in. Although, as Mr. Wachter indicated, we sometimes then put additional requirements on the development community. So those, could cancel one another out.
That answers my question. Thanks very much.
Yep.
Thank you, Alder. Alder Bennett?
Thank you. I was wondering, since we've had the land banking fund, I want to understand how we've used it thus far. How have we used our fund thus far, and what proportion of that has gone to housing?
Sure. So we've had 2 iterations of the land banking program in recent decades, and I'll start with the first iteration, which is the 2009, 2010, 2011 timeframe. We used land banking at that time to buy the old Don Miller car dealership properties on East Washington Avenue, which facilitated the development of the Constellation and the Galaxy, as well as the Spark across the street, although the Spark does not have housing associated with it. We also utilized that funding to purchase Union Corners that was at the time partially developed from the bank out of foreclosure. This was sort of the aftermath of the Great Recession. And we then partnered with, we issued an RFP, ultimately partnered with Gorman, and Gorman has constructed, of course, the housing that we see at Union Corners today, much of which has an affordability aspect to it. In more recent times, through sort of version 2 of the land banking program, we've purchased properties on South Park Street, including 1810, 1901, 824 North Avenue, which is just around the corner from Park Street. We've also, All Metals, which is part of the 1810 kind of complex, used it as well. I would have to say that from this version 2, we've been spending more time on the purchase of property and have done a little less on facilitating the development of those properties, although it is in the queue, and we are actively working on gearing up to issue RFPs for some of those other properties that we've purchased.
Cool. And for those RFPs, and I understand the staffing needs there, have we ever partnered with anyone to help assist us with the acquisition of land or the putting out RFPs? As I ask because, as I understand, many other cities that have land banks also have their own land bank quasi-governmental entity.
Well, we do have that, and it's the Community Development Authority, and we certainly have used the Community Development Authority. They are the Community Development Authority is going to take the lead on the Park Badger redevelopment. However, our Community Development Authority in Madison, for this purpose, really only has one staff person. I know in other communities, you might have a fully staffed Community Development Authority outside of city government that works on this type of work. Ours is much more closely aligned with the city itself.
I see. Thank you.
Thank you, Alder. I'd note that the sort of traditional land banks that we look at in other communities also get foreclosed properties. They tend to be at the county level, and they tend to be able to access foreclosed properties for very inexpensive amounts. Alder Latimer Burris.
Okay, I'm going to be driving after this. I promise this is it. I'm not going to drive while I'm on Zoom. But I wanted just to follow up with Alder Field's question, which I'm not sure if he was trying to get at, but when he was asking the question about does it create more land banking, does it increase other revenues if we are land banking? So I'm going to ask it in a different way. If we land bank, do the developers then see, oh, hey, the city of Madison has bought this property, they've banked it, and then it spurs them to start buying up properties or develop properties?
I would say yes and no. So in the case of East Washington Avenue, it is definitely the case that because the city went in and, took the initiative to buy the property and partnered with Gephardt Development to do those initial projects, it certainly, in the case of East Washington Avenue, gained the attention of the development community, and subsequent housing projects that were built along East Washington Avenue did not require any type of city subsidy. The private market came in and worked on those projects themselves. That being said, if you fast forward, now going on 12 years since we kind of did that effort, admittedly, the demand for housing is so much greater in Madison today than it was 12 years ago that I'm not really sure that the city necessarily land banking property would increase the value or the desirability to developers to do projects. I think what we're largely doing through our land banking efforts is making more properties available by, in some cases, taking multiple small properties and putting them together to have a more realistic, developable piece of property for someone to come in. But I don't think we're necessarily creating extra demand, just given the huge demand for housing in the community today.
Thank you, Alder Evers.
Yeah, just lastly, and thanks for this discussion. I think it's really helpful, particularly for our new colleagues, to understand this tool. Would you agree that one of the most effective means of the land banking fund is that it's not so much that we close the gap through the financing, given land values being pretty high and we're not able to get these on foreclosure, but that we have actual control over what happens to the properties themselves. That seems to be the biggest and most important part of it, because we live in a state where we're not allowed to require affordability. But if we own the property, then we certainly can determine the outcome to a significant degree. Would you agree that that's perhaps the most important aspect of land banking?
It is definitely true that by having ownership over a piece of property, we definitely have greater control over the developer that we partner with, and potentially through the level of affordability that can be provided. I do provide the caveat, though, that there's a limit to that. As noted previously, at the end of the day, the financial aspect of the project is going to govern exactly what the developer can do. Even if we own the property, we can't necessarily compel, or receive, or we cannot necessarily get everything that we ask for just because the numbers won't bear it out.
Right, particularly if we're working with private developers. But given that CDA is showing more willingness to do development, that, the risk premium that the private market takes on, that slice of profit, we're able to then develop perhaps much more affordably than the private developers. Something to keep in mind.
Yes and no. I mean, we still have the cost that we need to bear as the city through the CDA.
Well, thank you. Thanks. Appreciate this robust discussion.
Happy to.
Thank you, Alder. I assume that Alderman Latimer Burris has her hand up still from the last time and is now driving. So are there any other questions for economic development? All right, seeing none. Oh, Alder Vitever.
Sorry, wanted to ask if we could take a 10-minute break, please.
10-minute break has been moved, and is there a second?
Second.
Moved and seconded to take a 10-minute break. Is there any objection? Seeing no objection, it's 7:27. We'll say 7:37. See you all in a little bit. We're about 2 minutes out from coming back. And now we're about 1 minute out. So if committee members could return and turn your cameras back on so I know you're here. So it is 7:37. I will call us back into session and ask staff to call the roll.
Council President Curry,
Here.
Alder Verveer, Alder Vitiver, Alder Madison,
Here.
Alder Evers,
Here.
Alder Rummel.
Present.
Mayor, you have quorum.
Thank you. All right. So up next is the public safety and health section, starting with the fire department. Chief Carbon is here. Chief?
Good evening, everybody. Appreciate the opportunity. I'll take a quick run through the slides and obviously be ready and open for questions following. Some of the highlights to run through, probably one of the most significant requests within the capital budget under our fire and EMS equipment is funding for close to $1 million for replacement of our self-contained breathing apparatus. These are the units that we use to provide breathing air in any hazardous environment, and includes a total of about 150 units to take care of all of our frontline apparatus. This is obviously critical infrastructure that we really can't survive without, and we've had increasing costs to maintain the equipment we presently have, which is reaching end of life. We should note that we did apply for a federal assistance to firefighters grant for that same amount to replace those units. We're still awaiting award notices to find out if we will indeed receive that grant. We have not heard anything in the positive or negative to this point. However, they are in the active process of putting out notifications. We don't have a timeline, but we're hopeful to hear at least one way or the other to have some clarity in the near future. But we're also working on trying to get up to staffing levels that we would prefer, and with that comes some hiring and increased size of our hiring classes and our recruit classes. One of the larger expenses associated with those is protective gear and turnout gear, and therefore we do have a slightly increased request within our fire and EMS equipment budget to reflect those needs as well. If I could have the next slide, please. The next segment here is under the training capability development. This is our ongoing development of our capacity to do ongoing personnel training and recruit training at Station 14. This year, within the capital budget, we have funds allocated to extend the roadway into a cul-de-sac and provide water mains with some fire hydrants. The requested budget for next year is to continue on with some additional water supply in that area, but also to provide the foundational infrastructure prepared to receive training structure in 2026. Everything seems to be online right now and moving along with our anticipated timelines. And so this is just the the next step along the way as we try to get to the end goal and having an effective training capacity out at number 14. And then the last component, Matt and Brian, I think, tackled the largest bulk of the conversation regarding Fire Station 6. But as mentioned earlier, a significant amount of planning and architectural work had gone into Fire Station 6, including the bidding process that came in a couple of $1 million over budget. And so our best attempts to try and be prudent with the use of budgeted dollars was to slow down the project at that point, revisit the potential capacity of scaling back the proposal or trying to look at going out to bid again when conditions were more favorable. In the meantime, things have changed and we have this new opportunity to look in part of the larger planned redevelopment of the South Transfer Point along with the CDA's project. And so the dollars there are reflective of that proposal. As we discussed earlier, Station 6, as we compare it to the remaining stations throughout the city, is really lacking some gender-inclusive restrooms, gender-inclusive sleeping quarters, and it really reflects one of the last stations where you're sleeping, foot to foot with beds, and just some aftermarket attempts to try to divide sleeping quarters into some more private spaces. So I'm happy to take any questions on those items or certainly anything within the capital budget.
Thank you, Chief. Questions? Alder Curry?
Thank you, Mayor, and thank you, Chief. Chief, just to ask about the apparatus or the ask to upgrade or replace those units. If this request is approved in the budget and then you receive notification that you all have received the funded request, would you then be requesting a modification or reallocation to use it for a different project, or would you no longer need that or code it as a capital expense?
Thank you for the question. If we receive the request through the federal grant dollars, then we would, and I'm going to use the wrong terminology here, but we would request the cancellation of this allocation within the capital budget. We wouldn't request to use it for other purposes.
Thank you.
Thank you, Alder. Other questions for the chief? Alder Harrington McKinney.
Thank you, Madam Mayor. Chief, I just have to ask the question. This is around Fire Station number 6. And in the earlier discussions, I was on the Finance Committee when we talked about the lack of gender inclusive accommodations. And it was also a surprise to me that there had been no movement in that area. I hear and understand that the budget allotment was just over way out of line in terms of the assessment. But I guess I'm wondering, was there a circle back, or what was the notification that this, was not moving forward because of the expanded budget allocations or assessments? And I'm probably not using the right term, but it costs more than it was allocated. And I know that you were not on board then, but it just, I guess I need to hear, I understand the pause, but, why was it not doubled back and reconsidered or and updated?
Sure, I appreciate the question. And I don't know if Brian Cooper is still available or not. I can throw in the request for assistance here, but my understanding is when the bids were received, they came in grossly out of line with budgeted dollars to achieve the work. At that point, we did go back and work with the architectural firm again to try and scale back the proposal and look at providing cost estimates. I don't believe it went back out to bid a second time, but they did provide additional cost estimates. And when looking at the totality of the project, what they were able to provide for anything close to the budgeted dollars wasn't really going to accomplish what we were hoping to within the complex itself. at that point, the idea was to continue to look at alternatives that could accomplish what we need to in the station, but try to meet the budgeted targets. And honestly, I think we've been working at this along the way and having ongoing conversations and exploring ideas, and things have just continued to develop into the point where we are today with the newer proposal.
Oh, my final follow-up question, as there seemed to be, even though it was above the budget allocation, the department continued to work on possibilities in terms of how this can get done. Where was this reporting cycle, and who and where and what commission were you updating that this was on pause and not moved forward because of the expenditures far exceeded what was allocated? And I'm complete with that question.
Yeah, thank you, Alder. I guess I don't know if I'm entirely equipped to answer that. I believe it's been transparent and all the way through. We certainly did not host any community meetings to make a formal announcement to that effect. But it has been, part of the ongoing process, as we've discussed, with Brian, his staff, with the mayor's office, and everywhere else. I don't know if Brian, if you're more equipped to answer that.
I would say the recommendation to not award the bid that went through the committee process through Board of Public Works and then eventually to Common Council. And that would have been in the spring or early summer of 2022.
Yeah, I think that's right. And I don't want anyone to leave this meeting with the impression that we haven't been working to do the work we need to do around gender equity in Station 6. We've faced some significant hurdles with cost, and when we determined that doing a renovation wasn't cost effective, didn't make sense, we immediately pivoted to seeing what else we could do, and the answer is to build a new station, which also helps to facilitate some of the desires of Madison College to expand their footprint. So it's actually, I think, ultimately serving the community better to do it this way. But we haven't abandoned the goals at all. But we're just trying to find a way to meet them that's cost effective.
May I just kind of follow up? Thank you, Madam Mayor. I absolutely hear and understand that there was continued effort to make allowances. So it's not that I thought that these efforts were abandoned. My question is, within the process, and it was mentioned that the updates went through the committee process. I guess I am asking, along the way, where was the update and the understanding that this project was grossly overbid, that there were allowances and other things that were done to help in the gender inclusive need. And I guess what I'm missing is that where was the reporting system that followed all of this?
So, Alder, the history is in Legistar. When we chose not to accept the bids, that went through the committee process and went to council. So that's all available to you. And in fact, I believe you would have voted on it at council.
Okay, I'll leave it at that. I will follow up offline.
Thank you, Alder. Are there any other questions for fire? All right, seeing none, thank you, Chief. We'll go on to public health.
Good evening, Carl Meyer, Director of Community Health for Public Health. Janelle is at the county board meeting this evening, so I am stepping in here. We have two requests. I'd prefer to start with the electronic healthcare records request first. So this is for a supplemental 150,000, which is an increase in our request to include a contracted staff member to help support our implementation of this system. It's a complicated nature. We know that this will help us to increase our billing efforts within the services we're providing. And so having an individual to help work through this with us and build pathways to expedite that process will help us to generate our billing elements faster. The second component is our South Madison facility redevelopment. And we've occupied our current facilities in South Madison since 2011. And we are at a place that the current footprint no longer meets our needs with regard to how our offices are configured and how, as well as how we're able to deliver services to our communities. So we currently occupy a variety of office suites at the Village on Park with a separate clinical space. And there's a lot to still be determined around this project, but essentially our goal is to consolidate all the clinical and office space in our South Madison into one new footprint. And it is possible that this may also impact our programs and services at our East Washington office location. We know that this will help create a dedicated gathering and meeting space for PHMDC that we currently do not have. We will be moving our lab, our laboratory services from the CCB to this space, and we'll create one entry point for all services provided at the new location. The facility would be approximately 30,000 square feet, would require approximately 150 parking stalls, and would have both clinic and laboratory space and office space to support approximately 105 staff. So essentially, this will increase our access to our services. It will eliminate customer confusion. It will improve efficiency with staff and other resources. It will maximize comprehensive service delivery by allowing us to provide multiple service lines and programs at one time. I think most of the other information was included in the packet, so happy to answer any questions that you all have.
Thank you, Carl. Alder Figueroa-Cole.
Thank you, Mayor. Is this the same project that Matt W. covered earlier? Or are they related?
They're related. Yeah, I don't know, Matt, if you want to step in and say anything else, but this is part of that redesign in the South Madison area. We are being considered as part of that.
Yep, we tried to be transparent and show public health's component in the public health budget. Fire's component is in the fire budget. But yes, it's the same redevelopment.
Yeah, your pictures were a little better. I'm just kidding. Carl, so the second question is for the second line in your presentation. Is that a software that you're using Capital for, or are we actually talking for? Is that kind of one of those things that we hire people with capital funding? Can you explain, please?
Yeah, so I think the way that this is introduced is because our electronic health records initial request is a capital request of 400,000, and so this is an additional 150 to support what we thought might be previously held within that funding line, and so. Again, this would be used in a short-term status, so we would not be asking for additional funds in the future to have further contracted staff. We're prepared for a maintenance position, but the actual ability to generate and implement rapidly, we have to work to build all these pathways and systems. And if you can't copy another health department's processes or have permission to do so, it can take a tremendous amount of staff time and effort to do that. And we just don't have those resources. So
I think you gave me the keyword. So this is for the implementation of the tool.
You got it. Yes.
The capital thing, not the maintenance of the tool.
Yes.
Got it. Thank you. That's all.
Thank you, Alder. Any other questions for public health? If not, thank you, Carl. And
Thank you all.
we'll go on to police. Chief?
Good evening, everyone. Good evening, Mayor. Chief Sean Barnes here with Teague Maurer, as well as Assistant Chief John Patterson, to present what was included in the 2024 Executive Capital Budget. I will present the 2 goals, and then I'll turn it over to Assistant Chief Patterson and Teague Maurer to talk a little bit more in detail about some of these projects that they've been involved with for a very long time. The first goal that we have is to maintain and deploy the current technology and equipment that we already have. It includes some of our systems as well as some of our operating systems to ensure that we can carry out the daily functions of police work. And then secondly, to maintain facilities for projected growth and or overgrowth, specifically around our evidence facility, and now included our new South Police District substation, in order to meet the needs of our community, in order to be accessible so people can have an opportunity to retrieve items that may have been taken and or lost. And so we think this is a very impactful budget for us this year, and we certainly appreciate the generosity of the mayor and the city. So I'll turn it over to Assistant Chief Patterson.
Thank you, Chief. Starting with an existing item that's already in the approved SIP for next year is a continuation of the Police Technology and Equipment Program. There's no major changes to that program. There is a 5% inflationary increase. And this is the program, as you know, that we've become very dependent on to achieve the first goal that the Chief mentioned, allowing for both software and hardware enhancements or upgrades that really need to occur as needed to stay current with both industry standards and end-of-life replacements. The new item on the SIP, if you've heard me talk at these meetings for the last several years, you can only imagine how excited I am to talk about this. So thank you, Mayor. But new on the SIP for 2025 and 2026 is a combined property and evidence facility with the South District Station. And Matt spoke to the South District Station proposed plans earlier. And then on the horizon list is the North District Station replacement. So moving on to the next slide, please. So we tried to include some photos here to share the need that has become very critical for property and evidence. And again, just as a reminder, the property and evidence facility is combining 4 sites that we currently have scattered throughout the city. And a combined singular site for property and evidence was identified back in 2008. It has been on the SIP and removed in the past, but been on the horizon list for the last, I think, few years. And again, thankfully, being moved back to the SIP by the mayor for 2025. The space need has really become critical. There's really no additional capacity with the 4 sites that we have currently. And in the table off to the right of your screen, the blue bar, I'm not sure if you can read it, that's our annual intake numbers, and then the yellow is our annual disposal. So you can kind of see, especially over the last 3 years, we've really been unable to keep up, and the gap has been growing with the number of items that we're taking in as opposed to those that we're moving out the doors. So what this has created is extended wait times for customers, frustrating workflows for our staff and for the community. And it has started to create some integrity and security concerns. And what we feel is a new facility will obviously improve customer service, improve the security concerns and the integrity concerns. But then for the South District Station, it'll address some capacity issues that current station has, and allow for some room for growth, which is not existent currently in the existing site. A co-located facility too is important to think about, because we do believe there'll be some anticipated operating cost savings, both for utilities, maintenance, and allow us to look at personnel roles and job duties, and look for ways to merge some of those and hopefully find savings there as well. So in the photos, just real quickly on top, we had one of our officers pose just for scale, so you can kind of get an idea of what it looks like out at the First Street facility. Currently, we have on any given day over 90 vehicles that we're required to keep in storage, both for criminal cases and investigations. And then a quick historical glimpse there, 2008 photo in the center lower of your screen. That shows the First Street facility, what it looked like there and the capacity that existed. And then right to the right of that photo is 2023, that's current day, where we're now piling boxes in what used to be walkways of that facility. So just trying to demonstrate through photos what the current state looks like. So with that, we'll take any questions that you may have. Thank you.
Thank you, Chiefs. Questions from PD? Alder Rummel.
Thanks, everyone. I'm sorry if I missed this answer to this, but having thought a bit about that First Street facility because of the public market, I'm wondering if you've thought of relocating it totally away. Was that what you were indicating, or just that you need more space in addition to that?
With what is proposed in the SIP for 25 and 26, Alder, that would eliminate that facility out at First Street. We would no longer need that.
Oh, good. Thank you. That's all I got.
President Curry.
Thank you, Madam Mayor, Chief, and Assistant Chief Patterson. I'm so used to saying JP. I can't imagine that there is any correlation, but I want to ask with, and I know it's been on the horizon list for quite some time, the material storing area. Would that have any correlation to reducing the length of time that it takes to receive a public records request?
Chief, I can take a stab at that. So it's kind of a complicated answer because some of the items that we're storing at these 4 sites are both evidence and considered records at the same time. But consolidating all of them into one location absolutely will speed up our staff's ability to locate the items and respond to requests.
Thank you.
Thank you, Alder. Alder Figueroa Cole.
Thank you, Mayor. Hey, JP, has there been any consideration or analysis of how much would it take to get a contractor or something of that nature on a temporary basis to convert some of that material into electronic records? Like the CDs and all that stuff that you guys have,
Oh, that's a great question, Alder. And actually, we just had a proposal that council approved last meeting using some grant funds that are available to us annually through the federal government. That's going to enhance our staff overtime. And is going to let them work through several thousand records actually and digitize both microfilm and printed records.
Oh, so that's the last grant that we approved just last.
That's right.
All right, perfect. Thank you, John.
You bet.
Thank you, Alder. Any other questions for police? If not, thank you, team. And that will take us to finance.
Thank you, Mayor. Finance has one capital budget item, and that is the administration costs that are funded through the cost allocation plan and allocated to the capital projects fund. And that amount is set through the cost allocation plan. And you can see the amounts are slightly higher in the 2024 executive SIP compared to 2023. And again, that's based on allocations within that cost allocation plan.
Thank you, Dave. Any questions? Seeing none, we'll go on to the zoo.
All right, thank you, Mayor. With the zoo, just a reminder that we have a agreement with the county on sharing costs of the zoo. There is an operating component to that. Under the operating component, the city is required to pay 20% of the net costs. On the capital side, however, it is a voluntary contribution, and the city historically has provided a capital contribution of $75,000 per year, and that's what you see before you. That's in the executive capital improvement plan.
Thank you, Dave. Alder Figueroa Cole.
I'm sorry, can you repeat what you just said about we are required a percentage that can be from both budgets, but we give this much for the capital?
So there's an operating component and a capital component to the agreement with the county. Under the operating elements of the agreement, the city and the county share in the cost, the net cost, 80% paid by the county, 20% is required to be paid by the city. Under the capital component, so capital projects at the zoo, there's no requirement that the city share in any of those costs. The city has voluntarily provided $75,000 per year historically towards those capital costs.
So I know we're in the capital budget for the other budget, since it's a percentage, so that varies every year then, depending on
no, in the operating budget, it's
the fixed amount.
It's a 80%, 20% split of whatever the net costs are after applying the revenues generated by the zoo.
Got it. So thank you.
You're welcome.
Thank you, Alder. Any other questions on the zoo? If not, that is the end of our list for tonight. Christine, do you have any final wrap up?
I do not. We will reconvene tomorrow at 4:30 and we'll start with the rest of the administration agencies, followed by transportation and public works.
All right. I would entertain a motion to recess until tomorrow at 4:30 p.m.
So moved.
Is there a second? Moved and second to recess until tomorrow at 4:30. Is there any objection to recording a unanimous vote in favor? Seeing no objection, we're recessed until tomorrow at 4:30 p.m. Have a good night, everyone.